Chat. We're back. We're back. Michael Burry bought more shares in after hours yesterday. You can kind of see it here. Had a little reaction. Stock hit like 26.40, but if you're looking at the longer term trend, it doesn't show it on the Yahoo chart. But if we go trading view, Michael Burry actually pushed the stock to a bullish pattern. If we go on the 4 hour here, that's another new, well, the trading view isn't really showing how much it actually went up. It hit like 26.40, but that's a new high from February. So you're continuing that bullish pattern. Looks a little something like that. Something like this. Well, I'd probably go off here. So it went to like 26.40, so it'd look something like that. I wonder why it's not showing it on TradingView. Yeah, it only shows it went up to like 26 on TradingView for some reason. But you did hit a 26.40. So that's cool. What's up, Risk Take Live? How you doing, man? Good to see you. I'm just chilling. It's probably just gonna be a chill stream today because my voice is dead. My voice is absolutely dead. I went to a Chris Webby concert last night. I haven't been to a concert in years. Like, it's not really something I do. Not a huge like concert goer. But Chris Webby's actually like someone I like and someone I listen to, so it was fun. Had a lot of fun. But my voice is dead. I'm surprised I can talk at all, to be fair. Yeah, I wonder why it's not showing this on TradingView. It's kind of weird. Let's go. I'll open my actual account, even though there's a ton of lines on there. Should be an interesting stream today. Last time we did the Intel earnings, there was a bunch of racist people in the chat, and it was kind of, I mean, one of the more active chats, but it was just a lot of racists. So it will be interesting to see if that's what goes down again, because I think Intel's up even more than last time. So, yeah, I mean, we'll see. A lot of racists on the Intel community, though, which is wild. Absolutely wild. Yeah, you can see it hit 26.40 on here. Maximize the sell. Oh, that's why TradingView is not showing it, because okay, TradingView doesn't show after hours, I don't think. Let me check that actually. Yeah, I think you have to go down here. Or where is it? I know there's something you can click for after hours pricing, more settings. Oh wait, it's right there. You would click this extended trading hours. There it is. Okay. So I don't need this. You guys, there's too many lines on my charts to look at anyway. It'll be too complicated. I look at my charts every day, so I kind of get it, but I don't think it'd work very well. All right, let's do it off the 4 hour. So go boom. And then you got this down here. Something like that. Something like that. Pretty solid. What happens if I send this left? Can I extend left? Okay. I want to see where this goes. Oh yeah, that's a pretty important pivot then. You can see anytime it's passed through this line, you've had a exponential upside or exponential downside. Pretty much every time, going all the way back even to 2024, it was a pretty key resistance line. And yeah, pretty important line here. Pretty important line there. Big bounce off of it there back in 2022. A lot of bounces back in 2022 off this line. That's pretty interesting. And yeah, so very key line here. Very key. That's probably why you saw the market reject it, but I mean, as far as the shorter term price action goes, if you're looking the past, what is that? November, December, January, February, March, April. So the past like 5 months, very solid bullish trend for the past 5 months. You had your lower low here after the big sell off. I think this is when you release warrants. I don't remember, honestly. I forget all this stuff. I'm pretty sure this is where warrants just got released, or here. I can't remember. It's somewhere. Yeah, because warrants got released in October. So the warrants got released. You hit your low. Then you got a little bit of price action here, but then you got your low or high, or your high or low here. Because the low here was 1964, the low here was 1997, so you got a higher low there, another higher low here. I mean, you never made a higher high or anything like that off of this, but you did make another higher low here, and then in February you made a higher high, so, low, high, higher low. I mean, I guess you would just group this together, so higher low here, higher high, higher low, and now you Burry pushed us into another higher high, which is very interesting, very interesting. So from a pattern perspective, GameStop is really bullish on the 5 month. But throughout time, you've had a lot of resistance at $26. I mean, here you traded up above $26 for like a couple weeks, and then eventually you had a big sell-off. So yeah, there's always been a lot of resistance at 26, it seems like. But we'll see what happens. We'll see what happens. We'll see what happens. Yo, why is the chat dead, bro? There's 10 people here. Like, if you guys aren't gonna type in the chat, at least hit the like button. Come on, bro. Come on, bro. If you guys aren't going to type in the chat, at least hit the like button. That's crazy, bro. That's crazy. That's crazy. It's actually kind of annoying that you guys don't type in the chat, I'm gonna be honest. Like, you could at least just say what's up. Like, I don't really expect you guys to like type in the chat and be active, but you could at least come in here and say what's up, you know? Hit the like button, say what's up. Like, that's really all you gotta do. It's yeah. I don't know. I think it's just odd that all these people come in when I start the stream. Like, maybe it's bots. It could be bots, but I think it's pretty weird that all these people join the stream when I start it, and then there's just no chat. It just doesn't really make any sense. What's up, AA Roan? How you doing, bro? I'm just chilling, bro. Just a chill stream today. I went to a Chris Webby concert last night, so my voice is dead. Absolutely dead. But it was a good time. RCH, Rich, I think. I'm just gonna say Rich. RCH. Whoops, I accidentally subscribed to you, my bad. I'm looking at your, what's up, RCH? What's up? Never seen that name in here before. Hope you're doing good. So yeah, probably just a chill stream today. I don't even think I'm gonna read any articles. I'll read like the Intel stuff when it comes out, but no articles today. I'm way too cooked. Way too cooked to read articles. It's Rich. What's up, Rich? Appreciate you stopping in, bro. I saw some news that I wanted to research. They got rid of the pattern day trader rule or something like that. I mean, this is old news, but I didn't know this was a thing. Yeah, this was like a week ago. The SEC approved scrapping $25,000 day trader minimum. Under the new rules, traders will no longer be required to maintain an account balance of $25,000 to engage in frequent margin day trading. That's actually pretty sick. That's actually pretty cool. Traders will face a lower barrier to day trading stocks and options. Proposed new rules. Wait, they approved. Okay, they approved it. Instead, eligible margin accounts of more than 2,000 will gain access to intraday margin buying power. Under the old rules, 4 or more day trades in 5 business days trigger day trading pattern, less the $25,000 requirement. So it's only 2,000 now? That's pretty dope. That means, that's pretty cool. I don't know how positive that is for a lot of people, because most people are terrible traders, so they're just gonna lose all their money. You know, they're gonna go throw 2-3 grand into an account and probably lose it all, but or you know, probably. I mean, it just depends how they trade, but they're gonna lose a good majority of it, most likely. So I don't think this is like a positive thing, but for someone like me, I mean, this is pretty positive, because now I don't need a separate, like, I have my GameStop account where I have all my shares and stuff, and I don't ever like trade or sell or anything in that account. Now I could actually make like a smaller trading account, because if I was gonna like day trade, I would most likely day trade GameStop, just because I know the price action pretty well. And you know, $3,000 is like 100 shares, over 100 shares. You don't really need more than that, unless you're you know, unless you have a lot more money, if you can risk that. If you can risk that for a day trade. For me, you know, I have a decent amount of money, but I'm not willing to risk like a ton on a day trade, so that would be like perfect for me. I just I don't think I have 3 grand to make a day trading account right now, so maybe later on. But pretty cool, pretty cool. Let's see, what's this? Microsoft plans first ever voluntary buyout. Voluntary buyouts to some U.S. employees. According to the one-time retirement program announced a memo on Thursday. They're paying people to retire, basically. Microsoft's been ramping up capital spending on data centers. Our hopes this program gives the eligible choice to take that next step on their own term. So they're just paying people to leave the company, basically. More gentle way to say, you're fired. You're fired! Do the Vince McMahon. You're fired! I can't do that, dude. My throat is so cooked, bro. I can't, bro. My voice is cooked, dude. I can't do anything right now. Oh, I went a little too hard at the Chris Webby concert, bro. It's crazy. It's crazy because I don't even like get into concerts. I don't even like concerts, but for some reason that concert was hyped, bro. That was hype. What's up, Moose? How you doing, bro? You sick? Nah, my throat just hurts from yelling and singing. What's up, Danny? Good to see ya. I feel like I've seen Danny in here before. I just don't remember. Let's see. I want to look at your channel activity. I swear I've seen you in here before. Oh, you were in here for the Nike earnings. What's up, Danny? What's up, bro? Yeah, not sick. Just my throat is so cooked, bro. Chris Webby played some of my favorite songs, so you know I was fucking singing, yelling. Gonna Google Chris Webby right now, find out who that is. It's a rapper. He's been around for a long time. He has a lot of music. It's like 17 years or something he's been making music. And I think he's around my age, maybe a little bit older than that. He's got some good shit. I think he I mean, I feel like the most popular songs are like the Raw Thoughts, but those aren't really my favorite ones. You just gonna expose me like that? Hey, I wanted to see if I've seen you before because I felt like I've seen your name before. I had to check. At least I didn't bring it down on the screen, you know. I could have, you know, opened it up and been like, "Yo, look what Danny's been typing in my chat, bro. Look at him." but but I didn't do that. I mean, I just did, but yeah, I can even make it full screen. I can really, let's see. I can really expose you, bro. I'll make it full screen. Look at this shit. Exposed. Look at him. He's only been in here for one stream. Man, how come you only been here for one stream, bro? I thought we were homies. That's crazy. I thought we were boys, bro. What is this? Community moderation. What the hell is this? Oh, it just takes me to that. Okay. They added some new tabs here. Participants. Huh. Moderation activity. Oh, I didn't. That's new. They never had that tab. Now I can see when someone gets auto clapped by the auto mod or whatever. The automated mod. I'm here to see if my AMD stock is going to drop or keep going to the moon. Isn't AMD at all-time highs? I haven't looked at it in a while. One of the OGs is heavy in AMD as well, but he hasn't been in stream for a while. Yeah, AMD's insane. Aren't like all the chip stocks at all-time highs, basically? Nvidia's not. Dude, AMD's crushing. That's crazy. AMD's like absolutely crushing. Intel's crushing too, obviously, but Intel's not at all-time highs. It's but Intel also pays a consistent dividend, and Oh, wow. I mean, that's very impressive. I can't believe Intel's up that high. That's, wow. Almost at all-time highs. Even with paying that dividend. That's wild, bro. That's actually wild. Wait, did they get rid of the dividend? I don't even know. I bought some IEP today, very small amount, 25% dividend, and trading it close to decade lows. IEP like doesn't go up though. I don't know, like that stock's sus, bro. That stock is super sus. 25% dividend, like that's so sus, bro. That is the most sus thing ever. How do they get away with that? How do they get away with a 25% dividend? I mean, one day this thing's got to move, right? But I don't know. That's fucking. What is their? They have like a SEC filing where they report their fundamentals. Let's see here. I've never actually looked to see if IEP like reports anything. Like, why is that thing in the shitter so bad? They have a 10K here. Okay. Ah, that's why, because they're losing money. Okay. What's their market cap? 5 billion? Okay, that's probably why. It's probably just overvalued. Let's see. Oh no, it's not overvalued at all. What the fuck? IEP's weird. They are losing stockholder equity though, so it's like it is the declining business, it seems. Yeah, I don't know. IEP's kind of sus. It's like they gotta make this thing start growing, but I mean at that value, 5 billion market cap, it is kind of interesting because their total equity, they were literally at almost 5 billion equity last year or 2024, 3.4 billion 2025. So yeah, that one's pretty interesting. It's just the business is declining, so it's like that's a little sus. That's a little sus. Like they literally lost 1.2 billion of stockholder equity in a year. Like if they do that again, that's really bad. But in 2023 they lost a billion, 2024 they lost 542 million. Last year they only lost 326 million. So it does look like potentially they could get to profitability at some point. But yeah, that's weird, man. That's weird. They have a weird balance sheet, but yeah, that's an interesting one. Especially 25% dividend, that's crazy. If that thing doesn't like I mean that basically covers your downside in a lot of ways cuz from 5 billion to 3.4, I think that's I mean we just do 34 divided by 50, I guess. That's about 68%. So, in basically yeah, I mean, if they keep declining though, that's not great. That's a weird play. That's an interesting play for sure. Very interesting play. It'll probably take a couple years to really see what's going to happen with it. It's definitely not going to be like a couple months or anything like that, unless the stock randomly like goes up one of these days. Then it could be like a short-term trade, but I think it's going to take a lot of time for you to see that actually work out, unless they get profitable. If they get profitable, that's a completely different story. US government has like 10 billion in intel. Of course it's going to go up. I guess. What's up, Hugh G? Saw Avis down another 50%. Yeah, I think it's trading at like $200 now. Crazy. Perfect time to get in on that car squeeze. I ain't touching that shit. I ain't touching that. I ain't touching that car with a 50-foot car. I wouldn't touch that car with a semi and a trailer. No good. That was a weak ass short squeeze though, realistically. Only like a 7x. Not that special. It was a weak short squeeze. I was hoping it would go a little longer because I wanted to report more on it, but it didn't. Now I just have to report on GameStop that nobody cares about. It was fun while it lasted. Reporting on something else. Yeah, there's not really any news I want to talk about or anything. There's not really much going on. Even GME Meltdown doesn't care about GME anymore. It's a lot of other tickers. I haven't looked at that in quite a while. Car is on there now. I think it's crazy that people take time out of their day to like talk about stocks they would never short or never buy. Like, what a waste of a fucking time. Dead Island 2 and its DLC are $7 on Steam. That's awesome. Dead Island's a sick game. Oh shit. It popped on my feed once and ever since keeps showing. The Reddit algo is so bad. It's probably because you clicked on it though. And you probably don't really like view other things on Reddit. So it thinks, you know. I mean, that's the goal of these websites and these social media apps, is to keep you on the site, you know, get as much screen time as possible. So if you clicked on something from that subreddit and you don't really click on anything else or view anything else, you know, it thinks that that's you know, if they promote you something from that subreddit, you'll click on it again and spend more time on Reddit. Lego reveals first Shrek sets. Kevin Durant autograph on Durant Pokemon card. Yes. Sorry in advance. This isn't going to be the best stream. I am way too cooked. I wasn't even going to hop on stream today, but last time Intel earnings was pretty hype. So I'm kind of forced to. Well, not really forced to, but if it's hyped again, it could be a good stream. I could probably block it, but don't really use it. Yeah, you probably could block it. I don't know. I don't know how Reddit works. Now that you typed it out in your browser, you're fucked. I'll go death. That's funny. Can't wait for the next Dead Island game. They're making a Dead Island 3? Or what Dead Island are they are? Or what Dead Island are they on? Now your phone heard it said out loud 3 times, Dunzo. I don't think that's actually a thing. I watched an interview recently with some like FBI surveillance. I think it's on Channel 5, and they talked about that. About, is your phone listening to you or something? And he said no. He said it's just likely you search something, or the algorithm's just good at predicting things. Which one was it? I think it was this one, exposing U.S. surveillance state. I think it was this one. It's pretty good. Yeah, it's this one. They talk about it in this interview. It's not really a thing. I never said it. My phone can read my mind. I'm in real trouble. Earbuds at work. What's up, Kenny? How you doing, Kenny? Yeah, Intel's up a lot. Intel's crushing. Absolutely crushing. I'll check that out. Love me Channel 5. Oh yeah, dude. Channel 5 is fire, dude. If you haven't, watch the Afro Man interview. That shit's good. Dying. I'm doing good, man. What about you? Oh, I'm doing good. I'm doing great, actually. My voice is just fucked. My voice is so cooked, bro. So cooked. I watched that. Afro Man Needs a Podcast. Yeah, Afro Man's smart, bro. He's a cool guy. He's a cool guy. At first I was like 2 hours, what the fuck, but I could listen to that dude talk forever. Yeah, he's awesome. He's awesome. I really liked that podcast. It's probably, out of any podcast I've listened to recently, that one's definitely up there. Probably the best. La da da. La da 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 da. They played that at the fucking Chris Webby concert, like while we were waiting for him to come out. And they played Pokemon. Bro, Chris, can I fanboy out for a second? Can I fanboy out, bro? Can I fanboy out? Alright, bro. I think a lot of you guys will appreciate this, but at the Chris Webby concert, they had like a screen on the stage behind him. And they were just playing like old school video games on it, bro. There was like fucking Donkey Kong Country and like Super Mario and Contra. They had like Grand Theft Auto Vice City. They played the Grand Theft Auto 6 trailer. There was just all these like video games in the background, and bro, it was fucking sick, man. It was fucking awesome. But they played the Pokemon theme song before his set to like get the crowd hyped up or some shit. The fucking intro to Pokemon. I wanna be the very best. It's playing on the screen and everything. But they also played Afro Man, and that was hilarious. La da da. Can you get clapped for singing a song? I think you can, but I don't know actually. I think only if the music is playing. I don't know if you can get clapped for acapella. Yeah, literally nostalgia maxing, bro. I thought that shit was cool. I thought that was awesome. Literally nostalgia maxing. Dead ass. Like that. There's no better term, bro. No jester. No jester. No jester. Oh man. Just looks maxing, nostalgia maxing, bone smashing. Status maxing. I don't know. It was fucking awesome though. It was awesome. And there was some hot ass blonde girl next to me, but I was just like so locked in. I didn't even like, and it was loud, bro. My ears are still fucking ringing, dude. Like no joke. My ears are still ringing. And I was too locked in to talk to her, but she probably had a boyfriend anyway, so it would have been a waste of time. But bro, it was hype. It was hype. We were like right in the front too. Like we started maybe like a few people back, but we just slowly like pushed our way to the front. And then some fucking fat ass came in, and he was like pushing everyone, and he ran into me and like literally like pushed me into the front. So I was like one person behind the front. It was fucking awesome, bro. I almost got in a fight with I almost got in a fight, I think, but I just fucking, I pushed the guy away after he pushed me, and then I just turned around. I was like, fuck you, bro. I was like, get the fuck out of here. And then I saw a little space right in front of me, and I just stepped into it, and I was like literally in the front. It was fucking awesome, bro. It was awesome. Luckily, I didn't have to beat someone's ass, but I probably wouldn't have anyway. If I would have got kicked out of that concert, I would have been pissed. That shit was too hype. That shit was too hype, bro. And Token was there. I don't know if anybody in here listens to Token. I don't know Token. I've never really listened to him, but he is pretty big. I would say a majority of people there were to see Token, or a good half of the people there were to see Token. And then there was this guy named Otis Julius. Right, you guys gotta see this fucking guy. He came out to the crowd and tried to get people to follow him. He's like, I'll give you a sticker for a follow. And a bunch of people followed him, and he got to me. And I was like, bro, I don't have my phone. I don't have Instagram. I don't have anything. All I've got is YouTube. And he's like, dude, I got YouTube, bro. I got YouTube. You can follow me on YouTube. I'm like, bro, I'm not gonna follow you. Like, I just told him straight up. I was like, bro, I'm not following you. Holy shit, but it was so funny, bro. This guy is such a fucking goon, bro. He's so funny, though. Oh, man. Shit's so funny, bro. He has his own little podcast, I guess. Does he have any of his music on here? Where's his music, bro? He's got a song called, like, Hyundai for Ferrari or some shit. Oh, yeah, Hyundai to Ferrari, bro. It's right there. It's right there. Hyundai to Ferrari, baby. That's my song right here, bro. Yeah. All right. can't. I think that's all I can play on stream. I think. Bro, this guy is a fucking goon, bro. Oh man, I should have told him to follow me though. I should have been like, bro, I'll follow you if you follow me. But I just, I don't know. I don't. I was just like, I didn't really like. I thought it was a good idea what he was doing. I thought it was smart that he was like going out to the crowd and talking to people and, you know, asking them to like follow him. But I don't like when people ask me to follow them. I don't like it, bro. Like I'm on here on stream making videos every single day. I don't beg for followers, you know. I'll tell you guys to hit the like button or something, but I'm not over here like, please follow me, chat. Please, chat. Please. Please. Chat, I need a follow. Nah, I would never do that. So, like, I appreciate his hustle, you know, I appreciate what he's doing, but like, I just, you know, I'm bigger than him. I have more followers. Like, I little broed him. Unfortunately, I little broed him. But I appreciate his hustle. So shout out to Otis Julius. Shout out to him. I'll give him a shout out. I think that's You're single, bro. Same. Yeah, bro. I've been single forever. I don't think I'll the day I come on stream and I tell you guys I have a girlfriend, I don't know if that day will ever come. I'll be straight up. I'm gonna die alone, most likely. What's up, Snakes? How you doing, Snakes? I don't know either of them, but we'll check them out. Definitely check out Chris Webby. I still haven't listened to Token. Like, I don't know if I would even like Token, but Otis Julius, listen to Otis Julius. That shit's funny, bro. Go listen to Otis Julius and leave a comment on his videos and be like, Corey sent me here. He's still not gonna follow you though. Bro, you guys should do that. Can I get you guys to do something? All the people in my chat right now. Can I get you guys to do something? Will you guys actually I know last time I did this, not many people participated. Not many people participated, but let me try to find which one has like the least amount of comments. That one has 7. This one has 2 comments. All right, bet. What is his? Let me look at his songs real quick though. I mean, all his music does well. Where's that video? Here it is. There. Go on this video. Whoops. Whoops. Go to that guy's YouTube channel. I just posted it in the chat. And leave a comment. Be like, Corey sent me here, but he's still not gonna follow you. If multiple people do that, that's epic, bro. That's epic if you guys do that. Go in on his video and type in Corey sent me here. He's still not following you though, or something along those lines. But yeah, shout out to Otis Julius, bro. Shout out to that guy. Shout out to that guy. We chillin'. It's Hyundai season for now. Amen, amen. It is Hyundai season. Hyundai. Push start, then I go. Or twist key, then I go. And it's Hyundai season. If you're moving too slow, it's because my beta never seen you. I don't know. Ferrari season coming. We want you to beg for us. Please, please hit the like button. Please. Please hit the like button. You've also never given us any stickers. I've never printed. Well, when I first started my YouTube channel, I did have stickers. Back when it was Crandall's World. Fucking 10 years ago. I did have stickers, but I've honestly never made merch. Besides that, I've never made merch or stickers or anything like that. Toss me that Wario hat. You can get it on Gamestop.com, baby. Gamestop.com. You can get the Wario hat, I think. I mean, unless they got rid of it. It could be. It could have been a limited product. I actually haven't looked. Oh, there it is. There it is. There you go. 27 bucks. Unless you're a pro member, then it's 26. GameStop exclusive, baby. GameStop exclusive. Done. Appreciate you, Kenny. Appreciate you, bro. That shit's funny if multiple people did that. If multiples of you went and commented on that dude's video, that's hype, bro. That's hype. Because he's actually going to see that. I mean, maybe he'll see it. Who knows? That's fucking funny if he actually... Oh, yeah, you guys... Let's go, chat. Let's go, chat. Oh, that's hilarious. Shouldn't have given Corey that sticker. Shouldn't have given Corey that sticker. Oh, that's funny, bro. That's funny, bro. That's hilarious. Fucking Otis Julius, bro. Hyundai to Ferrari, bro. Hyundai to Ferrari. Hyundai season is July, December. You got viewers because you don't beg for followers. Maybe. Maybe. A lot of people came and gone, you know? What the crowd that was in this chat, I mean, besides like Hugh G and Snakes, Ruben, Moose, like there's a couple people that have been here for a really long time. This is definitely not the same crowd that used to be in here like 6 months ago, year ago. I feel like it's always changing. There's always new people coming in, old people leaving. That's just how streaming goes, I suppose. It's just how it goes. That's not Corey Warren. Fair enough. Fair enough. Fair enough. How many viewers did you average before? I mean, about the same amount, like 5 to 10. It's kind of always been the same amount, I feel like. Stream really hasn't grown that much. It's all, like I said, it's always, you know, people coming and going. For now, we'll see, man. We'll see. The likelihood of, like, getting big on YouTube, or I wouldn't even say getting big, like, making YouTube a sustainable, like, career path is so... It's just so unlikely. Like, it's definitely less than, like, 1%. It's definitely a less than 1% thing. Like, if someone's out there making a living off of YouTube and, like... I mean, that's... That person's in, like, the top 1% of YouTube. For sure. It's not easy to build, like, a following, I feel like. And, you know, keep that following. People want tinfoil on GME. That's the only issue. When literally everyone for 6 years was bunk. Yeah, I'm not a tinfoil guy, you know. I like making people money. I want to see people succeed. I don't want to see people just like listen to me because I'm talking about some nonsense, you know. Viewers were chilling at 20 for a while, I feel. A few swing weeks, couple short squeezes. Yeah, I guess there was at a time we used to have around like 20 viewers, 15, 20, but I feel like that was more like at the beginning of the stream when there was still a lot of hype and the stock was like hitting 30 often. Definitely have lost some people who have just lost interest in GameStop or lost confidence in it. But you know, there's a lot of people that have been around the stream for a really long time that left as well. It's not really just because of the stock. It's also me. You know, I'll take full blame. You know, I am not the best personality. You see that girl that does STEM vids on YouTube and PH gets 4x the videos on PH? Wait, what? STEM videos? No, I haven't seen that. What the hell are is that what I should start doing, bro? Start posting on PH, bro? I'll start slapping my ass on PH, bro. Oh shit. That'd be awesome. I've seen that though. I've seen that like people will post their Minecraft videos and stuff on PH, and they actually like make more on PH than they would on YouTube because the CPMs are so high. That shit's crazy, bro. That shit's insane. Can't even use PH where I live. It's illegal. I think you have to like upload your driver's license or some shit. It's literally illegal to use PH in Utah. Well, not illegal, but you do have to verify your age. I think Burry was like, what the fuck? I could bought the shares today cheaper. No, I think there was I think Burry wanted to push the stock up into that bullish trend. You know, and you also have to think about it through like a liquidity perspective, you know. If you like who knows how much he bought, but he bought enough to where he himself pushed the stock up to like 26.50 in after hours. Let's see, where is it? 5 minutes. Yeah, see, like this right here, this little first 5-minute candle, I believe this is when he bought, and then you got a reaction after the news dropped. But if you go on like a little bit longer time frame here, you go on the 4-hour. I talked about this when I first started the stream, but Michael Burry like pushed the stock into a bullish trend by himself. If you do a trend here, let's see, the last high back in February was 26.08. Now the new high is 26.40, whatever, 26.45. So Burry pushed you into a higher high, and he also took the liquidity of anyone who shorted here. You know, anyone who shorted at $26 and was still holding their short, or they just had like a stop loss. And also, you know, think about it through like a day trader's perspective. Anyone who shorted here back in early February, they shorted at 25, or mid-March if they shorted here, or literally a week ago if they shorted here, all their stop losses were at 26. You know, every single person who positioned in early April, mid-March, and literally like a week ago, if they didn't day trade their position or sell at lows, their stop losses were at $26 or 26.11 or whatever the high was back here. which it looks like it was 26.10 or 11. So a lot of people have stop losses there. So essentially, potentially Michael Burry just took a bunch of people's stop losses. Unless, let's see. Yeah, see? Because I believe this candle is his buy. I don't... Unless this whole move is his buy. I'm not sure that it is. I think this just one candle is his buy. But this one candle went from 25.69 to 26.18. And, the high of February was 26.10. So essentially, Michael Burry just took a bunch of people's stop losses. And then I don't know if any of these other candles or anything are a part of his buys, but if they are, he was just taking people's stop losses for his own position. maybe he wasn't able to buy a position somewhere down here because or maybe he wanted to show like what someone who has a lot of money buying in after hours looks like, because earlier in the investment for me, you saw a lot of price action like this in after hours. We used to see this all the time where the stock would be, flat for the day and then it would randomly spike up $2 or something in after hours. Like we saw that a lot about like a year or so ago. So maybe he was just trying to show people what that looks like. But either way, he did push the stock into a higher high, which is extremely bullish. Extremely bullish. And whether it holds or not, we'll see, but that is bullish. You're a contrarian. Yeah, pretty much. I don't think people like contrarians. I'm also kind of a doomer. Especially when I talk about like crypto and real estate. I'm kind of a doomer. Science, tech, engineering, and math. I'll follow you wherever, just saying. Nah, I mean, we've tried to stream on Twitch and Kick. I think I'll just stick with YouTube. Stock's cooled today because of Iran tension rumors, not GME specific. Yeah, I mean, the market, there's probably a lot of people shorting the highs as well, though, because, literally like 3 weeks ago, everyone was bearish, and people are still bearish. People are still extremely bearish. They think the rally on the market is bullshit. So there could just be a lot of short. I just never equate news to price action. So, in my mind, people are still extremely bearish and they think this stock rally is bullshit and they probably missed out on it. So they're upset and they're going to sit and short against the rally just because of how they feel and what they think. But in reality, the market's most likely extremely bullish. So anyone who's shorting the market right now is completely, they're fucked, unless they're day trading. If you're day trading, that's a totally different thing. But if you're positioning shorts on the market right now, I think you're fucked. Personally, I mean, I could be wrong, but I don't think I'm wrong. I just think people are really upset. They think because they think because of the Iran war and because of the macroeconomics, like they think that the market shouldn't be at all-time highs. So, people are pissed. People are upset that they missed out on that rally. So, just based off of their emotions, they're going to short against it because they think that the market's wrong. It is what it is, man. Like, that's just how I view it. Like, I view everything happening in the market through the perception of a trader. Like I don't view it like, oh, this piece of news happened or this happened. Like I just don't view it like that. I put my mind, or I try to put myself in the shoes of like someone who has a bunch of money and is a trader basically. Because money's what moves the market. It's not a piece of news. Sure, a piece of news might make someone do something, but a piece of news isn't what drives the market. It's the money move. The money getting bet on the market is what drives the market. Kev, what's up, Kev? Been a while, bro. I hope you're doing good. Hope you're doing good. Coda Man, what's up, Coda Man? Don't believe I've ever seen you in here before. Hope you're doing good. Appreciate you stopping in. I need to go grab more waters, bro. I'll be right back. Okay, I'm back. I think news drives short-term volatility. Degens, they certainly don't dictate trends fundamentals, though. Yeah, I could agree with that. I I think a piece of news can be like the start of a change in trend / fundamentals. I think it could definitely be like a start, but it's definitely not the driver of long-term trends. It's very, dependent on the piece of news or whatever is, whatever came out that drove that stock to move in that short-term price action. But so it definitely could be like the start of something or whatever. But yeah, I agree. It doesn't necessarily like dictate the future. First time you just happened to pop up in my recommended, probably because I took profit on GME calls. Nice, bro. Nice. Good to I mean, I don't really I'm not really a trader. I just invest, so. But nothing wrong with taking profits, bro. Nothing wrong with taking profits. I'm just not a big fan of paying taxes. So, I don't really like taking profits personally. The Intel champ is here. Don't worry. What's up, Justin? Good to see you again, bro. Good to see you again. Hopefully the stream today is a little more chill than last time. There was a lot of racism in the chat last Intel stream. So hopefully it's a little better this time around. Yeah, if it's the worst news, trend changes, but most of the time it's just degens and bots trading. It's like the news is a cue to take your bet. Yeah, kind of. Yeah. I sold the other day at 63. We'll see if this puppy crashes again. We'll see. We'll see, bro. We shall see. It is up a lot, but chips in general are absolutely crushing. I have a similar viewpoint. I also hold shares and invest. Just recently got into trading. Well, hopefully it goes well. Hopefully it goes well. Just stay disciplined, my friend. Don't make trades off of emotion, and make sure the odds are in your favor. I don't think like trading options puts the odds in your favor, but so, if you want to be a more consistently profitable trader, I would say, get into trading stock instead of options. Like it's more expensive, of course, but you buy 100 shares, that's the same thing as one option. So if you want the odds more in your favor, definitely trade shares, but good luck, bro. Good luck. What's this about racism? What the fuck been happening around here? It's just the Intel stream. The last Intel earnings stream we did. There was a bunch of people in here like talking shit on the CEO just because of the way he talked and stuff. Because the government invested into Intel like, I don't know, 6 months ago, 8 months ago. I don't remember exactly when, but so, it was just a bunch of Trump supporters in here just fucking talking shit on the CEO because of the way he talked. And it was insane, bro. It was actually insane. If it doesn't come down, I'm going to be pissed. Why? Yeah. Why would you be pissed? If you thought taking profits at $63 was a good idea, why would you be pissed if it kept going up? That doesn't really make any sense. If you think it could go up higher, I don't know why you would have sold. So I don't know. I've traded too much. I've traded too much to be like to care. If you take profits, you take profits. What happens from then on it just doesn't matter. It just doesn't matter. There's 1,000 other stocks to trade. What's up, Isaiah? I bet he's Jewish. Wait, what? I'm just here for money moves. I mean, that still doesn't make any sense, though. It still doesn't make any sense why you'd be, like, upset if it kept going up. The point of taking profits is because you're done with the trade. So, I don't know. Just trying to stack shares. Fair enough. Fair enough. Fair enough. Tinder takes action against AI profiles by making users scan eyes for proof of humanity. That's crazy. Ugh. is it on like at this point is online dating even like relevant anymore? Like how do you know you're like not even talking to a dude? Like I don't even know, man. I don't even think online dating's relevant anymore. I think you have to like actually like go talk to people in the real world now. I don't know, but like I feel like online dating would be tough this day and age with how prominent AI is. You've had people buying and selling the S&P for 30 years and they probably in debt. Not everyone sees the risk. Thinks they can sell tops and buy bottoms. Good luck is what I say, each to their own. Yeah. I mean, some people are successful at it, but just depends how you approach it. I'm not a big fan of swing trading. I don't like swing trading, but I think day trading's the most interesting piece of trading because, like, if you think about it, I don't know. I'll just use GameStop as an example because I feel like I can use the SPY as an example. The SPY is a decent example, but I feel like GME would be an easier example, but we could use the SPY as an example. Let's see. I guess we'll just do a daily candle. So, if you were a day trader from pretty much like the end of October to early March, you could basically collect, let's see, there's about a 3-point range there. Yeah, about a 3-point range daily, I would say. So if you were able to collect like 2 points or even just one every day from a day trade, I mean, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Obviously, that's like pretty. I mean, let me count up here. 25, 37, 44, 50. We'll just say like 70 trading days. 70 trading days you were able to get a point. And maybe you won like half of the trade, or I don't know. I would say maybe if you're lucky you could win like half the trades. Or if you were doing like 3-to-1 trade ratios, you'd probably be profitable like, I don't know, probably like 60% of the time. So times 60%, that's 42. So 42 minus 70, 28. So you would do 48 or 42 minus 28. So you would essentially collect 14 points on the SPY. Just, a rough estimate. You'd have to be a pretty proper trader to do that, but so you'd collect 14 points on the SPY. And from late October to early March, the SPY was trading between 680 to 695. So we'll just go in the middle, 690. So if you take that 14 points you would have made, 690 plus 14, 704. Well, look at that. The SPY is pretty much trading at 704. So, if you were day trading, essentially all this time you would have spent all this time trading to collect 14 points. Unless you were a really fucking good trader and you were winning a lot, maybe you could collect more. And then maybe you could have lost, you could have lost points. But essentially trading for October, November, December, January, February, March, trading for 6 months. And what I think could be a pretty much realistic outcome. It's going to be variable, of course. You could win more, you could win less, or you could lose. So you could have been trading for 6 months and still ended up with the same outcome as, just buying at 690 and letting the market do its thing. Like, that's pretty crazy to think about, that you could literally like waste 6 months of your life short-term trading and just end up with the same outcome. But the only difference is if you actually just hold the shares, you don't have to pay taxes on the profit. So there's also that aspect. But yeah. So, there could be room for day trading, but it's just tough, unless you're really fucking good and you're making more than that in that example. But not every trade is a winner, You win a couple, you lose one, or you win 3 and you lose 2. Like, you don't win every single day. I mean, if someone's out there claiming they win every single time they place a trade, they're probably just trying to sell you something. I don't even think that's realistic. So, but yeah, so pretty interesting. But I think day trading. The only aspect of day trading that is like better is, during this time when the stock went from 690 to 633. If you were day trading, you wouldn't have had a position throughout the sell-off, so you would have had liquidity to buy the dip or do something if you wanted. If you were just a day trader, that's a totally different thing. But I think day traders just have more flexibility. You might not necessarily make as much as if you were to buy and hold. I think you would over time make way more just buying and holding and not paying taxes. But I mean, if you're good at day trading and you're okay with missing out on gains, you have a lot of flexibility as a day trader. I guess that was kind of my whole point I was trying to make. You would have ended up with the same outcome basically, but more flexibility, I guess. I know, it's just hindsight. The hold was easy as fuck. It usually is. But, I mean, it depends what you hold, of course. Obviously, it depends what you hold, but of course the hold is easier. You can actually go and just live your life and not worry about what the market's doing every day and not have to place a trade every day. And that's another thing, is like finding a pattern that you can trade every single day. That's tough. A lot of trading strategies you might only see that pattern once a week or like once a month or something. But with those trading patterns, you would definitely collect more than 1 point. I would say the example I was giving is more like a scalper, if anything. If you're only able to make a trade off of a pattern every like now and then, you better be getting a lot more than 1 point. That's for sure. Pick your horses and let them run. That's my strat. My strat is YOLO all in GameStop. They have those bumper stickers that says "Let Jesus take the wheel." Mine is "Let Ryan Cohen take the wheel." I'm gonna make a bumper sticker that says "Let Ryan Cohen take the wheel." Some solid merch right there. You picked one horse. When you get time, can you check out Kraft Foods? I'm curious about it. The only thing I know about Kraft Foods is that Berkshire is reducing their position on it, but I think it's undervalued, but I think they're losing a lot of money, or they're in a lot of debt or something like that. I don't exactly remember. 22 bucks. Trading at 26 billion market cap. Do a quick look. I haven't looked at it in a little bit. Someone just bought a 5%, or they did something. Oh, maybe they're just reporting. Let's see. Here's their last 10K. Relatively recent. Yeah, see, they lost fucking $6 billion last year. That's terrible. How did they lose so much? That's an insane loss. They invested. Payments to acquire marketable securities. They bought marketable securities. Yeah, that's a weird balance sheet. Let's see. Or weird cash flows. But fuck. It's trading like pretty far below its stockholder equity, but you went from 49 billion in shareholder equity in 2024, and now you're at 41 billion, so they're losing a lot of shareholder equity, but potentially this is undervalued if they can make it profitable again. That's just a huge loss for 1 year. 6 billion or 5.8 billion. That's a massive loss for a year, especially when they were making over 2 billion a year or 3 billion a year in the prior years. To just like lose 6 billion like that, that's insane. Like, you know, how are they going to continue to lose like that, or are they going to be profitable? And also they're doing that they're splitting the company up. So it's going to be a totally different investment here soon when they split the company up. The one half might be really good and the other half might be really bad. I think if you invest in Kraft Heinz now, I don't know how that works exactly. I don't know if you would get shares of both companies. Like, you would get shares of one and it would be like $10, and shares of the other and it'd be like $10. So I don't really know how that would work, but it could be interesting. It's just the 6 billion, that's a huge loss. That is a massive loss. They definitely need to do something drastic to make that a viable investment. If they're going to continue to lose money like that, that sucks. But if that thing ever does become profitable, or, you know, when they split it into the two different companies, if somehow they can make both of those profitable, it could be an interesting investment. But it also could sell off more after they split the companies, you know? Not really. There's actually a book that talks about that. I don't really remember what it says. I think I have it over here. Which one is it? This one? Because it's a pretty rare thing in the market for that to happen. I think it's this one. Where is it? Let's see. Is it this one? Maybe it's not this one. I don't remember. It's one of these books I have. They talk about, I think they're called a spin-off or something like that. Is it this? I don't remember what book it is. It's one of those books. They have a section about like spin-offs or whatever they call that, where a large company splits into two different smaller companies. Maybe I'll try to find it after the Intel earnings. I just forget what book it is. Demerger? I don't know what they call it, but it doesn't really matter. There's just you just want like an example of things that have happened like that in the past. And the one of those books back there talks about it. I just don't remember which one it is. I think it's called a spin-off, not a demerger. But I'm not sure. I couldn't find it, so. And also, I don't really want to read right now anyway. I need to save my voice for this Intel shit. Corporate spin-off, essentially, probably, maybe it could be the same thing. I think that's just what they call it, as a spin-off. I just can't remember. But there's like multiple examples in one of those books back there where they talk about like multiple companies that have done that and like how the stock has reacted after it's happened and stuff like that. It's pretty interesting, actually. Oh wow, Intel's ripping. Intel's ripping, son. Oh, we gotta get the stream clip. We gotta get the stupid stream clip that I don't... What? I wish I didn't... I mean, I guess I don't have to do these stream clips, but... No, Intel's up over 7%, 8%? Dude, how come every time I bet on these earnings trades, it doesn't work out? I buy puts, the stock goes up. I buy calls, the stock goes down. How come I can never win on 9%? Come on! So stupid, bro. So stupid, bro. So stupid. What's up, Kino? What's up, Kino? You're doing my reaction right about now. That's funny. GME was a spin-off of Barnes & Noble. Maybe it's not spin-off. 12%? Dude, that thing is ripping, son. Holy shit. Holy fucking shit. Bro, it's absolutely ripping, bro. It's absolutely... I gotta redo the stream clip, I guess. Oh my god, dude. Intel's up over 12%, bro. My puts. I bet so much on puts. Oh, chat. No, chat. I just lost so much money, dude. So stupid, bro. So stupid. Oh, man. Make sure you guys hit that like button. It says there's over 60 people in here and we got 10 likes. That doesn't make any sense. That doesn't make any sense. You guys need to hit that like button. Alright, let's see what these financial results be looking like, baby. Let's see what they look like. Let's see. First quarter revenue was $13.6 billion, up 7% year over year. First quarter earnings loss per share attributable to Intel was 0.73. Non-GAAP EPS attributable to Intel was 0.29. Forecasting second quarter 2026 revenue of $13.8 billion to $14.8 billion. Expecting second quarter EPS attributable to Intel of 0.08. And non-GAAP EPS attributable to Intel of 0.2. Why do they have such a large EPS loss for the quarter? I feel like that's pretty big. Holy shit, it's still going up? Holy guacamole, man. 16%? Dude, it's still going up! Stop! Stop! Oh, man. My puts! Just kidding. JK, dog. JK, dog. I'm a GameStop degenerate. You guys think I bet on this? Money, dude! You guys think I actually bet on this? Maybe I did. Maybe I didn't. Maybe I bet calls and I'm just joking. Maybe I just made a bunch of money. You guys don't know. You guys don't know. Alright, let's see. Intel today reported first quarter 2026 financial results. The next wave of AI will bring intelligence closer to the end user, moving from foundational models to inference to agentic. The shift is significantly increasing the need for Intel CPUs and wafer and advanced packaging offerings. I accidentally forgot to... Sorry, I'm trying to make this stream clip at the same time. I'm reporting the earnings. My bad. Let's see. With a solid foundation in place, we are addressing this opportunity by listening to our customers and driving their success with our technical expertise and differentiated IP. This deliberate reset to how we operate drove a 6th consecutive quarter of revenue above our expectations, as well as new and deepened relationships with our strategic partners. There we go. We delivered robust Q1 results reflecting the growing and essential role of the CPU in the AI era, and unprecedented demand for silicon, as well as our disciplined execution to expand available supply. We remain focused on maximizing our factory network to improve available supply and meet our customers' needs throughout the year. Yo, what? Bruh. How is there 76 people in here? Nobody's typing in the chat. There's 10 likes on the video. Hit the like button. Like, what are you guys doing, bro? Like, this is such a joke, bro. Such a joke. Insane. You know what? I'm not even gonna read anything. You guys don't want to hit the like button. You guys don't want to type in the chat. You know what? I won't read anything. I won't read anything to you guys. How about that? How about that? Can't even support the stream. Why should I do anything for you? Hey, a new Channel 5 video got uploaded. That's cool. That's cool. One sec. I'll read more in a second. I was just joking anyway. If you guys took that seriously, I mean, that's pretty sad because I was just joking. I'm just doing something. Let's see. Let's see here. Okay. Okay. I unliked. Well, okay. Ungrateful? I'm not ungrateful. I'm not ungrateful. What am I ungrateful about? How am I ungrateful? That doesn't even make any sense. I'll get AI to read it. I got you. Well, much love, studio. Appreciate you, bro. 10 lazy losers left. Yep, pretty much. 10 little crybabies.
Wah! He said he wasn't gonna read to me anymore. Wah! Wah! I need someone to read to me because I don't know how to read. Wah!
Hit the like or we will find you. I'm rich, bitch. Peace. Bro, you probably made like $2,000 or something. You probably bought like 3 options and think you're cool. That's crazy. That's crazy. I prefer when we read the Bible. True, true. True. Very true. All right. In the first quarter, the company generated $1.1 billion in cash from operations. Business unit summary. The comparability of our consolidated condensed financial statements year over year was impacted by the deconsolidation of Altera. Altera, which was previously a wholly owned subsidiary, was deconsolidated from our consolidated condensed financial statement effective September 12th, 2025, following the closing of the sale of 51% of Altera's issued and outstanding common stock. Altera's financial results of operations were included in our consolidated... Okay. Let's see. I have 75% AMD, nothing to do with Intel directly. Oh, fair enough. Fair enough. What's up, Calzone? Business highlights. Intel expanded its clients portfolio, launching Intel Xeon 600 processors for workstation, Intel Core Ultra 200S Plus, and Intel Core Ultra 200HX Plus processors for desktop and mobile, Intel Core Series 2 processors for health and life science, edge computing, and Intel Core Ultra Series 3 processors with Intel V Pro. Intel also launched Intel Core Series 3 processors, bringing Intel 18A and the latest IP, modern features, and all-day battery life to the mainstream for the first time. Intel and Google announced a multi-year collaboration for continued deployment of Intel Xeon processors across Google's workload, optimized instances, including the latest Intel Xeon 6 processors powering C4 and N4 instances. The collaboration also included co-development of custom ASIC infrastructure processing units, designed to improve utilization, reduce complexity, and scale AI workloads more efficiently. Intel Xeon 6 was selected as the host CPU for NVIDIA's DGX Rubin NVLA 8 systems, reinforcing Intel's continued role at the center of leading AI infrastructure deployments. Intel and Samba Nova announced the blueprint for a heterogeneous hardware solution, addressing performance, efficiency, and software compatibility challenges. Facing enterprises and cloud providers, the design will combine GPUs, Samba Nova RDUs, and Intel Xeon 6 processors as the host and action CPUs. Intel joined the Terafab project as a strategic partner alongside SpaceX, xAI, and Tesla. Oh yeah, they talked about that in Tesla's earnings. Tesla's ability to design, fabricate, and package ultra-high performance chips at scale will help accelerate efforts to refactor silicon fab technology. Intel Foundry expanded assembly and test capacity in Penang, Malaysia to support customer products amid rising global demand for packaging solutions, while increasing global semiconductor supply chain resilience. Intel repurchased the 49% minority equity interest in the joint investment entity related to Fab 34 in Ireland. The agreement reflects Intel's continued business momentum, underpinned by the growing and essential role CPUs play in the era of AI, and a significantly strengthened balance sheet. Let's see. Alright, they don't really have much else here. Now we just wait for the webcast, I guess. Whoa! They got some epic music going on there. Some epic music. Okay. Well, pretty exciting, I guess. Not really. How is there 60 people here and 14 likes? That's crazy, bro. That's crazy, bro. Is it like that difficult to like hit a like button? It takes less than a second. You just literally click the like button. It's so easy. Is it that difficult? Must be. It must be. Could GME acquire Intel? That'd be interesting, but probably not. I feel like Intel is too large of a company. Gotta run. Alright, Snakes. Appreciate you, bro. Have a good one. I should stream tomorrow, but it is Friday, so lately I haven't really been streaming on Fridays. So I mean we'll see. You know. We'll see. I guess it just depends if there's anything to talk about. I do have like a couple articles and stuff to read, so probably will stream Friday, but not 100% sure yet. Not 330 billion. I don't think Intel's business is worth 330 billion. The stock's market cap's at 330 billion, but I don't think Intel's business is even close to that. Yeah. It's like 200 billion, so definitely not happening. Definitely not. You'd have to issue a lot of shares. And yeah, GameStop's cash is also not relevant because they can just issue shares to the market. You can raise as much money as you want by issuing shares. But I don't they can only issue up to 1 billion shares, so I think that's not even close to that much. Would it be like 400 million shares? The stock would have to be up too, so it'd probably have to be trading at like $30. So they can only raise like 12 billion with by issuing shares. That's not that great. You'd need a pretty massive, if it's possible, you'd need the stock to squeeze again, so you could issue the shares at like $60 or something. But even then, that's only 24 billion, so that's still, I mean, that's huge, obviously, it would be huge for GameStop, but it's not enough to buy something like Intel, of course. And also, I don't think that's, I just don't think that's a reality. It's going to be a physical store, most likely. Walmart competitor. Target, probably. All right. Why the fuck is this dude calling me, bro? Dude, the person who scammed me 30 grand just called me. I haven't talked to this person in like 3 years. Should I fucking blast him on stream, bro? Let's call him back and blast him on stream. Why is this faggot calling me?
Please leave your message for 80.
he turned his phone off. What a fucking loser.
Please leave your message.
What a pussy, bro. Fucking weirdos, bro. Fucking weirdos. Fucking weirdos, man. It would have been funny to blast him on stream, though. Too scared to answer. Too scared to answer. Man, this is really cool. Really exciting chat. You guys have a lot to say. Look at it. Look at all the things in the chat. Oh wait, the chat's not moving. Wild. I'm still crying. Yeah. Is what it is. That's why trading's stupid. Because you think you're all, no offense to you or anything. That's just the reality of trading, You think you're smart, you think you're doing all the right things, you think you're fucking beating the market until you're not, You're only winning until you're not. I mean, you still won, you still made profit, but this is a good example of why trading is stupid. Held because of that meme? Okay. You bought a stock because of a meme? That's interesting. That's interesting. I'm gonna find something new soon. True. Very true. I'm feeding big fishes with my money. What I earn on longs, I give back on shorts. That just sounds like you're not good at trading. I don't know. I don't know if that's something to be like hyped about. I think being a bad trader isn't cool. The point of trading is to make money, not to sit and break even. So I don't know. I don't know. I'm a terrible trader. That's what I wanted to say. Oh, that's awesome. Oh, have you ever tried like not trading? Have you ever tried just like finding something you're confident in and investing and like going and living your life? It's a good idea. Sitting in front of a screen staring at numbers and candles probably isn't the best use of your time. It's like a casino. I can't stop. That's a different problem. That's a totally different problem. Sounds boring. You think sitting in front of a screen staring at stock charts is funner than living your life? Okay. Okay. Should have bought a farm instead of staring at screens till you had chickens poop everywhere. Yeah, I mean, egg prices will probably go up, so the chickens are probably a better investment than staring at a screen. Then I can afford a farm. Yeah, you're never making enough money to afford a farm trading unless you're already rich. It's just not even gonna happen. If you think you're gonna make a farm trading, ha ha, yeah, that's funny. That's funny. Chickens ain't that messy. They can be pretty messy. They can be pretty messy. But yeah, not that bad. But at least if you had a farm or like even if you didn't have a farm, at least if you had some chickens or something. Oh, that'd be cool. I've always wanted chickens. I think they're pretty cool. I'd rather take care of chickens than stare at stock screens, that's for sure. Got 10 of them, they ain't that bad. Oh, that's awesome, bro. That's awesome. I love that. What other farm animals do you have? Anything cool? The goats are messy. You got goats? That's awesome. Is one of them named LeBron? Or Michael? Or Kobe? You name your goat Connor? You name your goat John Jones? One of them's named Luca. Let's go. That's awesome. I love that. I love that. Luca. That's so funny. There's so many good names you could give a goat. So many good names. What was I gonna do? I was about to do something, but I forgot what it was. What was it? I don't even remember. No, I guess it wasn't that important. I'm on the right track on trading stocks, couldn't handle chickens. I don't know why like people are so obsessed with trading. Like you guys must really like paying taxes to the government. Trying to get a cow from the neighbor, but he ain't too keen on selling one. Yeah, I don't blame him, bro. Cows are so valuable. He's got 40 of them. That's awesome. That's sick. But I mean, you definitely shouldn't. I wouldn't blame him. I mean, I believe cow steers, whatever they call it here, feeder cattle and live cattle. They're both at like all-time highs. Crazy. Yeah, it's fucking live cattle's $247 a pound and feeder cattle's $366 a pound. It's like That's a crazy. A cow is a crazy investment. It's a crazy investment. But for the past, I mean, at least the past couple years, but it's pretty much only gone up. Like you were stagnant for a really long time on cows and stuff, but pretty much after 2021, it's only gone up per pound, which is pretty wild because you can beef up the cows. So not only is the investment per pound going up, you can also make your cow bigger, which is that's just a crazy compounding investment. He's got 40 of them. Giving every cent of my bank account to maximize other shareholder value is my call. You must not know how shareholder value works. So that's a pretty weird thing to say. You losing on trading doesn't give people shareholder value. So that's I know you're probably trolling, most likely, but you have a lot to learn, my friend. You have a lot to learn, just judging by the way you're typing in my chat. Was thinking about buying shares since Elon wants to use Intel for new project. That's chill. That's chill. Shouldn't you be buying an investment based off of what it will be in the future, not just because Elon's doing something with it? I don't know. It's a interesting reason to want to buy a stock. Intel is a multi-$100 billion company, and like that's your focus, is like a tiny little piece. I just can't get behind that. I wish this earnings call started a little sooner. Oh yeah, I remember what I was gonna do now. Man. You remember the days when I was the only person doing these earnings streams, bro? Now literally everyone does them. Everyone just copies what I do. It's pretty interesting. Pretty interesting. Created in the US. I'm just getting started, so looking for something reasonable. Thank you for your tips. I don't know how reasonable Intel is at this point, but good luck. Good luck. I think there's a lot more interesting picks than Intel. Obviously, I'm a degenerate and I'm all in GameStop because I think that's the only fairly valued stock in the market when you compare it to the business. Every other stock is completely overvalued when you are looking at the business compared to the market cap of the stock. So, I'm not really interested in investing in things that are overvalued, because even if they do well in the future, doesn't really, it's very debatable how much you'll actually, it's very debatable how much your investment will actually grow if you're paying for something that's potentially overpriced. But do what you want to do what's best for you. I'm just some random person. I'm just some random degenerate on the internet who puts all their money in GameStop. GameStop could not work. It could not work. I have a pretty strong conviction that it will, but yeah, I would rather seek out something that's not overvalued. Intel is undervalued? No, it's not. It's definitely not. How is Intel undervalued? It's trading at a 337 billion market cap and sitting on 200 billion in assets. How is that undervalued? That's not undervalued. You must not know what undervalued means. And didn't Intel lose money this quarter? Their EPS was negative 0.73 or something like that. Didn't they just lose money? Like how do you think they're gonna make money this quarter or this year? They most likely will, but do you think they will? They made money? You sure? You sure? You're a doofus? You're in my chat continuously typing. Who's the real doofus? You're in my chat trying to talk about a terrible fucking business. Bro, what are you fucking smoking, bro? The net income loss is 4.2 billion. Are you fucking stupid or something? Holy fuck, get that guy out of my chat. What an idiot. Oh yeah, they made money. Are you like actually stupid? It literally says right here, net income loss, $4.28 billion. Are you like actually fucking stupid or something? That's crazy, bro. That's actually insane. Holy shit. This guy must actually be an idiot. Are you too like retarded to open up a fucking balance sheet and look at it? Holy fucking shit. That's actually insane, bro. That's actually insane. Good lord. I knew people were stupid, but I didn't know people were that stupid. I'm just joking. I knew people were that stupid. It's funny that this fucking guy is trying to tell me that, saying that I'm a doofus and that they made money and that I don't know what I'm talking about, but they literally lost $4.2 billion this quarter. Like, holy fuck, bro. Holy fuck. Like, that's actually insane how you can, like, be that retarded. That's actually insane. Wow. That's a new level of stupidity I've just witnessed today. I've been streaming for a long time. I've been making content for a long time, but I just witnessed a new level of stupidity that I don't think I thought I would have ever seen. That is just next level stupidity. Good lord. Good lord. AI is the future. Do you think Dell is overvalued? I haven't looked at Dell, but like I don't know. I don't know. If AI is even if AI is the future, is the premium you're paying today for those AI businesses worth, you know, what they're going to be worth in the future? I think there's a lot of questions. Overvalued, undervalued, that's more like, I mean, sure, you can make an assumption based off of the business equate, or, you know, comparing it to like the market cap of the stock, whatever. Like, you can do that and kind of get an idea of if something's potentially overvalued or undervalued, but in reality, like, overvalued, undervalued, it's just an opinion. It's not really relevant. So it's just I just don't know like how much those businesses can actually grow, and if you'll get the proper amount of gain for that growth. A lot of those businesses have already grown and have already had massive gains, and I think the future is very debatable on a lot of investments. Did I see the AMD jump? No, I didn't. Did it go up? Oh yeah, it's up 4%. AMD didn't have earnings today, did they? It just went up because of Intel? I don't think AMD didn't have earnings, did they? Is it just up because of Intel? That's weird. Don't just Google everything and believe that number. Read the report. Yeah, exactly. Exactly. If you're getting your info from AI and you think you're smart, holy. Like, open up a SEC filing and read the actual report. Don't just fucking make things up. When Elon does his terafab mega factory, we don't think it'll bring more value to Intel. It could. It could, but I guess that's not really my point. It's like if you're buying Intel for a 300 billion market, I mean, when you're comparing Intel to something like Apple or something like that, you know, Apple has like 400 billion in assets and it's trading at like a 4 trillion market cap, so you know, it's trading basically like 10x the assets. If you're looking at it that way, you know, Intel is pretty interesting, but like they just lost 4.1 billion or 4.2 billion this quarter. Like, is Intel actually that good? It's very debatable. Apple makes tens of billions of dollars every year. I don't exactly know how much Apple made off the top of my head, but Apple is always crushing, always profitable, so the valuation is kind of justified. Intel, I think there's a lot of debate. I'm all about numbers. I'm all about fundamentals. I don't care what Intel's doing with Elon. I don't care about that stuff. And they just lost $4.2 billion in one quarter. Like, that's to me, that's a huge red flag, but the market for some reason loves it. The market, I mean, the stock's up a fuck ton, so you know, whatever. But a stock being up isn't interesting. I'm interested in the business as a whole. I don't care about a stock chart. I don't care about a price on a screen going up and down. Just ignore him, bro. You're getting banned. You literally came in here and you're trying to say that I don't know what I'm talking about, yet you think Intel made an earnings and you think their EPS was 1 cent when they literally lost 4.2 billion and the EPS was negative 70.73. Like, you're just like an actual idiot, bro. Like, that's crazy how you think you're like this smart person and you think I don't know what I'm talking about, yet you're coming in my stream and just making things up. Like, that's crazy, bro. Get a fucking life. That's actually wild, bro. That's actually wild. AMD's on the 5th. All right, thank you, Mo. Appreciate it. Intel made 13.6 billion this quarter. Are we reading the same earnings report? Are you guys like are you guys like serious? Are we reading the same earnings report? I feel like you guys are literally just making things up. That's crazy, bro. Are you guys just coping? Like, good, congratulations, your stock is up, but you don't have to sit and cope about the numbers. Oh, man. Oh, you're talking about the revenue. Revenue, no, bro. Revenue and net income aren't the same thing. They made 13.5 billion in revenue. Revenue? Do you know the difference between revenue and net income? Wow. Wow. Do you see this? Net income loss 4.28 billion. Do you guys not know how to read a fucking balance sheet? Good lord, bro. That's actually insanity, dude. That's actually insanity. Holy fuck. Are you guys like can't fucking read? You're so dumb, they lost millions, not billions. Bro, what? It's literally billions. Oh my god, wow. Holy shit, there are some fucking geniuses in the chat today. Wow. These people don't even know how to read a fucking balance sheet. That's crazy. And it's crazy how you guys are saying I'm dumb, yet you guys don't even know how to read a fucking simple balance sheet. Holy shit. Wow. Insane. Insane, bro. Whew. Man, you guys need some serious help. You guys need some serious help. I feel like since SaaS boom stocks get priced in for this might be insane in 5 years, let's already price it like that. Yeah, exactly. They're pricing in the future, but the future is, in my opinion, unknown. So it's, for me, it would be a tough investment. You know, obviously there's a bunch of people in here who like Intel and are making money. That's great, but a stock going up or down doesn't interest me. I'm interested in the business fundamentals and what the stock is, you know, what the stock is priced against the business. I'm sure if we went and did fundamental analysis on Intel, it's probably overvalued, but you know, I'm not going to waste my time doing fundamental analysis on Intel because I would never buy it. It's literally at all-time highs. Like, what's the point? If you're not already positioned, I mean, what's the point? It's probably because of guidance. Good point, Stilo. They did do guidance that is pretty interesting. That's a good point. He said Microsoft and Oracle are down for layoffs. Yeah, this guy's lost. Yeah, that's most of the market, unfortunately. They get all their information from Reddit and Twitter, and they think they know more than they actually do. But they can't read a simple balance sheet for some reason. The thing that actually matters. Pretty wild. But what's up, Slevin Snipe? Good to see you again, bro. Good to see you again. What's up, David? How you doing, man? Do you think it'll come back to 60? I have no clue, bro. I don't know. Expose their chat log. What the fuck? He did worse. I don't think that guy's ever been in the stream before. I'll check, but yeah, that guy's never been here before. And then the other dude, I don't think he's ever been here before either. Usually the people that come in and talk shit and act like know-it-alls have never been here before because, you know, I take those people out and I talk so much shit on them every time, so they'll never come back. So it would just be rare for someone who's been in this stream before to come back and act like that. There's a few out there, though. Don't get me wrong. I've had to permaban a few people. There's people that have literally been trolls on my channel for like 2 years now. And they just have nothing good to say but negative things. And, you know, they get permabanned. Are you saying Intel is losing money? Well, they lost money this quarter. Are they going to lose money on the year? Who knows? Because they lost money last quarter too, but last Q1 2025 they lost 833 million. This quarter they lost 4.2 billion, 833 billion. This quarter they lost 4.2 billion. So, you know, will they make money this year? Who knows? But I mean, they lost a lot of money this quarter. Am I short Intel? No. I don't trade Intel. I'm just reporting on it. I'm just someone who reports on stocks and YOLOs all their money into GameStop. I'm just interested in other businesses, but I would never buy a lot of these things. Like I said, I think GameStop's the only fair valued stock on the market when you compare it to the business and the potential future. I think it's the only thing fairly valued. Everything else seems extremely expensive, and I also just can't really like create a good story of the future for a lot of other businesses to justify the premiums they're trading at as well. So, you know, I feel like there's a lot of tough investments out there. To me, GameStop's the easiest one. What time's the earnings call? I think it starts here in like 5 minutes. If you only look at the non-GAAP adjusted numbers, Intel made $1.5 billion in profit, but if you look at the GAAP actual numbers, Intel posted a massive $3.7 billion net loss, translating to an EPS of negative 0.73. Yeah, I appreciate that, Martin. I appreciate that. That makes sense. See, context is really important. Context is very important. But yeah, to me, actual numbers is all that matters. You know, GAAP. Back then, when Intel was around 50, the fundamentals show Intel is worth $7. Oh, wow. Interesting. That's insane. Yeah, see, then it's extreme. I mean, I can't verify your analysis or anything like that. I mean, I definitely could verify it, but I'm not going to. But if that's real analysis, I mean, that's why I'm not interested in it. I just don't feel like the future, like what they're pricing the stock now, I don't know if that really replicates the future. I don't know. You know, I can't build a story for Intel to justify what it is right now. When it was trading at $20, I mean, that was easy. That was easy, but out for now. Thanks, Intel. Nice. I'm just getting my toes wet and learning about financial reports, but this guy at my job has been talking about this huge project and how they get overlooked for being smaller compared to others. Well, I would say most people have zero clue. I mean, look at my chat. Look at my chat. Like, most people have zero clue what they're talking about when it comes to the stock market. So, you know, I don't know. Like I said, you know, you got to do what's best for you, what you're comfortable with, and what you like. You shouldn't listen to anyone else. Unless they're actually trying to teach you something that's relevant. Some guy just telling you about a huge project that gets like overlooked or something, like that has nothing to do with business. It's like he doesn't know how much that project's going to make, how much it's going to cost for them to even complete the project, how long is it going to take for them to actually become profitable on that project, or is the project even going to be profitable at all? There are so many questions someone like me would be asking that guy. It's, you know, you can make it that simple, but if you actually want to be, I mean, simple works sometimes, but yeah, I would have a lot of questions. I made a killing yesterday. Okay, nobody asked. Nobody asked, big buck. You're saying you make $1 million trading stocks every year? Okay, I definitely don't believe you. But nobody asked. Literally nobody asked. So you're kind of just exposing yourself as a liar. Because anyone making $1 million trading stocks every year wouldn't be in my fucking chat. And if you you know, if you make $1 million trading stocks every year, you better donate some money, bro. Prove it. Donate $100 right now. All right. Don't be talking shit, bro. Don't be lying, bro. Nobody thinks you're cool. I promise. Nobody cares. everything's been expensive for years now. If you think like that, it's very hard to make money on the market. I mean, is it? Is it? The past 2 years have been the best years in the market for me personally. And looking out 5, 10, 20 years, it's going to be the best decade ever. So I don't think it's very hard to make money. It's pretty easy, actually. Perhaps why Buffett's sitting on 300 billion of treasuries. I mean, you also have interest rates that you haven't seen in like 18 years. So, cash is the most valuable it's been in a very long time. Making a lot of money holding cash. GME is a dying company. Well, go. If you think that, you don't know how to do research, my guy. But I'm gonna ban you now. Since you wanna act that way, I'll ban you. What's up, Hugh? How you doing, man? How you doing, Hugh? Good day? Good, bro. Glad to hear it. Glad to hear it. Oh, is the earnings call starting? The earnings call should be starting any minute now. Where's the earnings call?
Thank you for standing by, and welcome to the Intel Corporation Earnings First Quarter Earnings
Enjoy.
2026 earnings conference call. At this time, all participants are in listen-only mode. After the speaker's presentation, there will be a question-and-answer session. To ask a question during the session, you'll need to press star 11 on your telephone. If your question has been answered and you'd like to remove yourself from the queue, simply press star 11 again. As a reminder, today's program is being recorded. And now I'd like to introduce your host for today's program, Mr. John Pitzer, Corporate Vice President of Investor Relations. Please go ahead, sir.
Thank you, Jonathan, and good afternoon to everyone joining us today. By now, you should have received a copy of the Q1 earnings release and earnings presentation, both of which are available on our investor relations website, intc.com. For those joining us online today, the earnings presentation is also available in our webcast window. I am joined today by our CEO, Lip-Bu Tan, and by our CFO, David Zinsner. Lip-Bu will open with comments on first quarter results, as well as provide an update on the progress we're making on our strategic priorities. Dave will then discuss our overall financial results, including second quarter guidance, before we transition to answer your questions. Before we begin, please note that today's discussion does contain forward-looking statements based on the environment as we currently see it, and as such, are subject to various risks and uncertainties. It also contains references to non-GAAP financial measures that we believe provide useful information to our investors. Our earnings release, most recent annual report on Form 10-K, and other filings with the SEC provide more information on specific risk factors that could cause actual results to differ materially from our expectations. They also provide additional information on our non-GAAP financial measures, including reconciliations where appropriate, to our corresponding GAAP financial measures. With that, let me turn things over to Lip-Bu.
Thank you, John, and good afternoon, everyone. Q1 results demonstrate continued and steady progress across the business, reflecting strong demand for our products and disciplined execution to expand available supply. Revenue, gross margin, and earnings per share were all above the high end of guidance, marking our sixth consecutive quarter of exceeding financial expectations. Even as we improve factory output, demand continued to run ahead of supply for all our businesses, especially for Xeon server CPUs where we expect sustained momentum this year and next. Intel 3-based Xeon 6 and Intel 18A-based Core Series 3 products are now in full volume production ramp, and each represents the fastest new product ramp in 5 years. We are maximizing and optimizing our factory output to meet customer needs. It is our top priority. Intel is now a very different company than when I first joined over a year ago. We have taken and continue to take deliberate steps to rebuild Intel into a more competitive and more profitable company. Our cultural transformation is well underway, and we are embracing our roots as data-driven, paranoid, and engineering-centric company. We are also listening closely to our customers and putting them at the center of everything we do. Intel possesses some of the most vital assets necessary to be successful and to flourish in this era of extraordinary opportunity for the semiconductor industry. With a stronger balance sheet, a new leadership team, a rejuvenated and motivated workforce, and a renewed focus on engineering execution, we are turning our attention squarely towards innovation to capture opportunities in the near term and to position the company for robust growth in the long term. Driven by tremendous demand for AI, the semiconductor industry TAM is now approaching $1 trillion. Intel is well positioned to benefit from this demand with 3 strategically important assets: our x86 CPU franchise, our advanced packaging technology, and our vast manufacturing network. Artificial intelligence is now moving into the real world towards a more distributed inference and reinforced learning workloads like agentic, physical AI, and robots and edge AI. This shift is now beginning to show up in our results, as I want to spend some time on this today. For the last few years, the story around high-performance computing was almost exclusively about GPU and other accelerators. In recent months, we have seen clear signs that the CPU is reinserting itself as the indispensable foundation of the AI era. CPU now serve as the orchestration layer and critical control plane for the entire AI stack. This is not just our wishful thinking, it is what we hear from our customers, and it is evident in the demand profile for our products. Xeon server demand is seeing strong and sustained momentum. Customers are deploying server CPUs along accelerators in the ratio that is moving back towards CPU. The accelerator remains central to frontier AI, and we will continue to participate, innovate, and partner in that category. Our recent announcement with SambaNova Systems is an example of such partnership on heterogeneous compute architectures. But the backbone of AI computing in production remains a CPU-anchored architecture. That is good news for the x86 ecosystem. It is great news for Intel. And it is a structural reason I'm confident that CPU franchise will continue to be a meaningful growth engine for the company in the years ahead, not just the quarters ahead. Turning to Intel Foundry, the accelerating deployment of AI infrastructures creates a meaningful opportunity for us as we continue to build our external foundry business. I'm pleased with the progress we have made in foundry technology development over the last year, even though I will continue to remind you this will be a long journey for us. We have made steady progress with Intel 4 and Intel 3. And 18A yields are now running ahead of the internal projections, representing a meaningful inflection in our execution and our factory finished good output. We also continue to make steady progress on our advanced packaging technologies, including additional growth in customer backlog in the quarter. On Intel 18AP and Intel 14A, we continue to be encouraged by our external engagements. Intel 14A maturity, yield, and performance are outpacing Intel 18A at a similar point in time, and we continue to develop PDKs with multiple customers actively evaluating the technology. Their partnership has been critical, and their feedback is continuing to help us define the technology so that we can cater to their needs. We expect to see earlier design commitments emerge beginning in the second half of 2026 and expanding into the first half of 2027. I'm particularly pleased that our progress today has driven us to land more of our own future product types on Intel 14A as well. At a time when advanced wafer capacity is in a short supply, this enables us to have better control over our supply chain. Intel has pioneered nearly every major innovation that has enabled dimensional scaling and high-volume manufacturing of silicon transistors over the last 6 decades. We have always been willing to take measured risks that have eventually paved the way for step function improvements in transistor density, cost, power, and performance. As we look to continue challenging the status quo, I can think of no better partners than Elon Musk. We recently announced our partnership with SpaceX, xAI, and Tesla to support Terafab. Elon and I share a strong conviction that global semiconductor supply is not keeping pace with the rapid acceleration in demand. We are excited to explore innovative ways to refactor silicon process technology, looking for unconventional ways to improve manufacturing efficiency that will eventually lead to a dynamic improvement in the economics of semiconductor manufacturing. A year ago, the conversation about Intel was about whether we could survive. Today is about how quickly we can add manufacturing capacity and scale our supply to meet enormous demand for our products. This is a fundamentally different company today, and we still have a lot of work ahead. I would like to take this opportunity to thank our many customers, partners, and our hardworking employees across the world for their contributions towards building a new Intel. I remain firmly convinced of and focused on the opportunity ahead for Intel. With that, I will pass it to Dave.
Thank you, Lip-Bu. We delivered robust Q1 results reflecting strong demand and better than expected available supply. We also benefited from improved product mix and pricing actions, in part to offset higher costs. First quarter revenue was $13.6 billion, $1.4 billion above the midpoint of our guide. Q1 revenue would have been meaningfully higher, but demand continues to outpace our growing supply. Our collective AI-driven businesses now represent 60% of revenue and grew 40% year over year. These results reflect real and deliberate changes we have made to be more responsive and accountable. This quarter, our teams worked directly and diligently with customers to reach mutually beneficial outcomes in weeks, not months. We value the partnership and support shown by our customers, partners, and suppliers as we work to navigate this environment together. Non-GAAP gross margin came in at 41%, approximately 650 basis points ahead of guidance due to the combination of higher volume, which included previously reserved inventory, mix, and pricing. In addition, better yields on Intel 18A offset some of the higher costs we always incur in the early part of ramping a new node. We delivered first quarter non-GAAP earnings per share of 29 cents versus our guidance of break even on higher revenue, stronger gross margins, and continued spending discipline. Q1 EPS included a roughly 6 cents one-time gain in interest and other. Q1 operating cash flow was $1.1 billion, with gross CapEx of $5 billion in the quarter and adjusted free cash flow of -$2 billion. Moving to segment results. CCG revenue was $7.7 billion, down 6% sequentially and better than our expectations. Even with improved factory output, demand outstripped supply against a client TAM that remains resilient despite industry-wide component shortages and inflationary pressures. Our AI PC revenue grew 8% sequentially and now represents greater than 60% of our client CPU mix. Operating profit for CCG was $2.5 billion, 33% of revenue, and up approximately $300 million quarter over quarter on improved mix and product margins, sales of previously reserved inventory, better 18A yields, and lower operating expenses. Within the quarter, CCG launched Core Ultra Series 3 and expanded our offerings across consumer, commercial, and edge. This has proven to be our strongest product launch in 5 years, delivering better performance per watt, stronger integrated graphics, and more capable on-device AI features, all while maintaining our broad ecosystem of compatibility that partners and customers value. In Q1, CCG also expanded the reach of our Core family by launching the Intel Core Series 3 processor, which brings the latest IP, modern features, and all-day battery life to the mainstream for the first time. We're enabling a new class of mainstream systems that once again set the standard for everyday computing. DCAI revenue was $5.1 billion, an increase of 7% sequentially and 22% year over year, well above expectations and reinforcing the strong year of growth for DCAI we signaled 90 days ago. Strength continued across all segments and customers, as investments in CPUs are accelerating to support the evolution of AI from foundational training to inference and from inference to agentic. We also saw strong ASIC growth with revenue up more than 30% sequentially and nearly doubling year over year. Operating profit for DCAI was $1.5 billion, 31% of revenue, and up approximately $292 million quarter over quarter on improved product margins, better cycle times and yields, especially on Intel 3, and lower operating expenses. Within the quarter, DCAI signed multiple long-term agreements, including Google, supporting our view that the current business momentum is sustainable. In addition, Xeon 6 was selected as the host CPU for NVIDIA's DGX Rubin NVL8 systems, and Xeon remains the most deployed host CPU due to its industry-leading memory, security, and networking orchestration. Lastly, DCAI also established a multi-year collaboration with Samba Nova to design a next-generation heterogeneous AI inference architecture combining Sam & Nova's RDUs and Intel Xeon 6 processors. Intel Foundry delivered revenue of $5.4 billion, up 20% sequentially on increased EUV wafer mix driven by Intel 3 and significant growth in 18A. External Foundry revenue was $174 million in the quarter. Intel Foundry operating loss in Q1 was $2.4 billion and improved $72 million quarter over quarter as better yields across Intel 4, 3, and 18A drove higher gross margins. This was mostly offset by increased operating expenses associated with an intentional step-up in Intel 14A investments to support both internal and external customer evaluations. As a reminder, Intel Foundry carries the bulk of the costs associated with the early ramp of Intel 18A, and we expect Intel Foundry's operating loss to improve through the year as 18A continues to ramp into volume and yields improve further. Within the quarter, Intel Foundry delivered output above our expectations, drove steady improvements in yields, and met key 14A milestones. Intel Foundry also added to its backlog of advanced packaging services and announced a multi-year expansion of our back-end facilities in Malaysia. This expansion will help support the committed demand that will begin to convert to revenue in 2027. Turning to all other. Revenue came in at $628 million and was up 9% sequentially due to a strong quarter for Mobileye. Collectively, the category delivered an operating profit of $102 million. Now turning to guidance. As we look ahead, we remain mindful that the macroeconomic and geopolitical environments are dynamic. Views on global growth, policy, and trade continue to shape customer behavior and investment decisions. In addition, constraints and rising prices around key components like memory, wafers, and substrates are driving higher costs that could impact demand for our product at some point in the year. We're prudently planning for PC demand to weaken in the second half of the year and expect the full-year PC unit TAM to be down low double-digit % in line with industry peers and experts. Offsetting this, near-term customer order patterns remain very robust across all of our businesses. In addition, our confidence in the sustained growth of CPUs driven by the AI infrastructure build-out is growing. Our outlook for server CPU demand has improved over the last 90 days, and we expect a strong year of double-digit unit growth for the industry and for us, with momentum extending into 2027. Combining all of these factors, we're guiding Q2 revenue to a range of $13.8 to $14.8 billion, up 2 to 9% sequentially. As we work hard to support the needs of all of our customers, we expect sequential revenue growth in both CCG and DCAI on improved supply and a full quarter of pricing actions, with DCAI up double digits. At the midpoint of $14.3 billion, we forecast a gross margin of 39%, a tax rate of 11%, and EPS of 20 cents, all on a non-GAAP basis. Our Q2 gross margin guide declines modestly from Q1 due to a meaningfully larger contribution from Intel 18A, still early in its ramp, and some inventory benefits in Q1 that aren't expected to repeat in Q2. Before I close, I'll share some additional insights on the full year. We expect our factory network to continue increasing available supply in the third and fourth quarters, though at a more measured pace than we anticipated 90 days ago, reflecting the base effect of much stronger than expected first half output. We also expect 2026 revenue on a half-on-half basis to follow the seasonal trends experienced over the last 10 years, with servers above and PCs below. We were very pleased with Q1 gross margins, and we will continue to push for gross margin expansion. It's my top priority. Our foundry team is delivering consistent yield and throughput improvements across all process nodes, which will help gross margins. With that said, Intel 18A is still early in its ramp, and rising input costs, especially in memory, present growing headwinds in the second half that we need to overcome. For OpEx in 2026, we have been directionally targeting $16 billion, but are likely to be higher due to inflationary pressures, variable compensation, and targeted investments we are making to capture the opportunities ahead. The drive for efficiency is core to the new culture Lip-Bu is creating, and we will remain laser-focused on finding additional operational improvements and maximizing ROI on all of our investing activities. We forecast capital expenditures in 2026 to be flat to last year versus our prior expectation of flat to down, reflecting increased capacity investments to support committed demand and a continued emphasis on improving fab productivity and output. We now expect expenditures to be roughly equal across the year and still to be heavily weighted towards the equipment that directly grows wafer outs to support growth this year and next. We recently closed the transaction to repurchase the 49% equity interest in the joint investment in Fab 34 in Ireland, a highly accretive deal allowing our shareholders to participate in the full economic benefits from a fab just now hitting its stride. As a result, we now expect non-controlling interest, or NCI, to net to approximately $250 million in each of Q2, Q3, and Q4 of this year, and be approximately $1.1 billion for 2027 and 2028 on a GAAP basis. Lastly, excluding the buyout of the Fab 34 joint investment, we still expect positive adjusted free cash flow for the full year. As a reminder, we funded our purchase with approximately $7.7 billion in cash and $6.5 billion in new debt. We remain committed to retiring all $2.5 billion of maturities as they come due this year and all $3.8 billion in 2027. In closing, Q1 was a strong quarter financially and operationally. All demand signals continue to emphasize the growing and essential role of the CPU in the AI era and the unprecedented demand for leading-edge wafers and advanced packaging to realize the vision of driving silicon-based intelligence to the edge efficiently and at scale. Our confidence is growing. We have the right team and the broad IP portfolio needed to solve our customers' most pressing economic challenges and drive long-term value for our shareholders. With that, I'll turn it over to John to start the Q&A.
Thank you, Dave. As a reminder, please ask one question and a brief follow-up in order to allow us to accommodate as many callers as possible. With that, Jonathan, can we please take the first question?
Certainly. And our first question comes from the line of Ben Reitzes from Melius. Your question, please.
Hey, guys. Thanks a lot, and congrats on the quarter, and this is good news for the country, too. With regard to my questions, the first one is on LTAs. If you could just talk about the Google deal, and there's a comment in the release that you signed other LTAs, and how are these structured, and how do they give you better visibility long-term in the data center business?
Yeah, good question, Ben. I think let me describe. Google is one of the multi-long-term contract agreement in Q1. And this is significant. Google, we have the Xeon IPO and building a long-term trusted partnership. It is very important for us. It's a very just evidence of a strong demand for our CPU and some of the ASIC business. That is important for us. And this is a good example of how we win in AI infrastructure build out. And then stay tuned. At the right time, we will announce other contracts. Dave, anything to add?
Yeah, maybe just to add, most of these agreements are structured with volume and pricing, and they're usually somewhere between 3 and 5 years. The Google one, I think both parties wanted to see an announcement. In some cases, customers want to keep that confidential, and we respect their desire to maintain confidentiality. So some of them we just didn't announce. It's a win-win, I think, in a lot of ways. We get a good understanding of the volumes that we can then build into our assumptions around supply. It's good for the customer because they know where the supply is coming from, and they get a good sense of what pricing they can expect.
Ben, do you have a brief follow-up?
Yeah, thanks, John. With regard to CapEx, is there anything in there with regard to investing in foundry customers, or is that still not in there? And when do you think we'll hear more about that in the CapEx figure?
Yeah, I would say, let me unpack CapEx just for a minute. So what we're now calling it is flat year over year. the initial thinking was that it was going to be down. I think we kind of moved it last quarter to flat to down, and now I think we're looking at flat. And that is really a function of the current demand environment we're seeing. One thing to keep in mind, in the last few years, a lot of our CapEx spending was space. And I think we're actually in a pretty good position in space. We wanted to have white space available to move into when needed. And I think Lip-Bu and I both feel like we're in a good place. So we actually will be bringing the space spend down pretty materially, even though the total is flat. And so what that means is the tool spend is actually increasing pretty significantly. In fact, tool spending will be up year over year, 25% or so. And so, that's I think a function of the fact that we just see a lot of demand, and we want to make sure we're catching up on the supply front. And then as we get into next year, we'll have a better sense, I think, of what CapEx looks like for next year. As it relates to external customers on the foundry side, our expectation, in which we've been pretty consistent on this through almost, I think, a year, is that we thought that customer signals would be more concrete in the back half of this year and into early next year. And so as we kind of pull that information together, combined with our own requirements, which are growing over time here, that'll give us a good sense of what supply we need over the next few years, and we'll be putting the spend in place. Lastly, maybe just to tack on, I think our relationship with the equipment vendors is quite strong. And so I think we have a pretty good ability to flex as needed. Naga and Lip-Bu are in regular engagement with all of the CEOs of the equipment suppliers. And so I think we'll be able to, manage and course correct as necessary as we get a better sense of the supply dynamics for us, both internal and external, and move our capacity accordingly.
Thank you, Ben. Jonathan, can we have the next caller?
Certainly. And our next question comes from the line of Ross Seymour from Deutsche Bank.
Hi, guys. Thanks for asking a couple questions. First, on the CPU side of things, the server CPU side, can you talk about how Intel's positioned competitively? Or is the strength that you're seeing more that the market demand is just that high? Or do you believe that your product line actually has some competitive differentiations versus either other x86 competitors or ARM offerings?
Yeah, Ross, I think good question. So first of all, I think the feedback from the customer, CPU is very important when you move from training to inference. The inference side, I think in terms of orchestration, control plane, and also managing all the different agents with data, CPU is much more efficient. So I think the ratio of CPU to GPUs used to be 1 and 8, and now it's 1 to 4. And I think towards parity or even better. So I think the demand is very strong. And then secondly, I think address your issue question. I think clearly we are kind of continue to refine our roadmap in terms of at the end of the day is the best product win. We have a lot of changes in terms of the CPU architecture change to focus on optimize for the different workload. And then the other part is I think we have a very big advantage. We not just have the CPU, we have advanced packaging and foundry. We can really effectively driving some of the changes more quickly to serve the customer in terms of their different workload. So I think overall, I think it's an exciting time that we call it the XPU. Besides CPU, we're also quietly building up the GPU with a new hire. And also we are moving into the accelerations, and so that we can serve the customer from the edge and then to the physical AI, and then really drive some of the new initiative to drive the competitiveness.
Ross, maybe one other thing to add is that it's obviously early in the Granite Rapids life cycle here, but so far the early traction has been quite good. So at least that's a positive step for the data center CPU business.
Ross, do you have a follow-up question?
Yeah, I do. Lip-Bu, it's following up on something you said in your preamble, where you said a year ago Intel was trying to survive, and now it's all trying to scale the supply, and that's a very positive change year over year. how does the business model and the spending behavior strategically change in that? Dave talked about increasing CapEx, a relatively small amount, maybe $17 billion up to $18 billion this year. But if you're scaling supply is under demand across the board. Is that something that you can handle with just improving yields, or does structurally CapEx need to go up and maybe call into question that you're not going to spend on 14A until you actually get customers' thesis that you've said in the past?
Yeah, good question. So I think in terms of spending, like Dave mentioned earlier, we are over the last year we drive a lot of efficiency, driving a lot of layer of management team, and then now we are really focused on. I spend a lot of time meeting with customer. So we are understanding the workload, understanding the engineering side. How do we drive improvement in terms of the architecture, the execution, in terms of tape out and the design to really drive efficiency there. And then the more important, I think, is talk to the foundry side. Clearly, we really drive the yield improvement. We see a very nice yield improvement on the 18A. And then the 14A, we already have the 0.5 PDK available. And now we are aiming for the 0.9 PDK. That's where customers are starting to decide which product, how much volume capacity we need to have. And then besides just driving the yield, we're also driving the improvement in the cycle time so that we can really meet the customer demand and timing that they request and then really optimize for them.
Jonathan, can we have the next question, please?
Certainly. And our next question comes from the line of Stacy Rasgon from Bernstein Research. Your question, please.
Hi, guys. Thanks for taking my questions. For the first one, I did want to dig into the segment outlook and I guess the implications for gross margins. So you said data center up, I guess, double digits. So that puts it up, I guess, 40% year over year, something like that. Assuming PC sequential is or year over year is similar up, maybe low single. I guess I'm just surprised. The gross margins, I understand the inventory benefit in Q1, but it feels to me gross margins are probably flat, excluding that inventory benefit, maybe even down a little bit. I guess I'm just surprised given the magnitude of the server growth, especially given the 18A yields are supposed to be improving. So are they still low enough that the 18A mix is just completely offsetting that? Or I guess any color you can give us in more detail on the gross margin drivers in the near term would be really helpful. I'm just a little confused.
Yeah. Okay. So I obviously don't have your model in front of me, but I'd say gross margins, if I unpack 2Q, we will see some benefit from pricing. We got a little bit of pricing benefit in the first quarter, but I would expect us to see some more meaningful improvement in the second quarter. That's certainly going to help. Mix, I don't know. It's going to plus or minus be in the zip code. Data centers is obviously going to grow faster, I think, but I'm not sure that mix is going to drive much. But 18A is going to be a pretty decent headwind to our gross margins. And if you look at Panther Lake volume increases, it's going to be going up, 6 or 7 times in the second quarter relative to the first quarter. And while the gross margins are improving in Panther Lake quarter to quarter, it's still below the corporate average. So when you have that big a shift in the mix with gross margins below the corporate average, it kind of weighs down on the gross margins. But we're roughly in the zip code of what Q1 was like anyway, so I'm not too concerned about it. In the back half of the year, we'll see have some of those dynamics helping us. I'd say the one cautionary concern I have on gross margin in the back half of the year is just some of the materials have gone up in terms of cost. Substrates are going up, T-glass. We got memory going up, as you know. So those things offset some of the improvements that we're having through the year. Longer term, I'm still hyper focused on gross margins, and I think we have elements of the roadmap in the right place in terms of cost structure. Certainly on client, definitely seeing improvement on the foundry side. We got more work to do on the data center front, but our goal is get the gross margins up clearly.
Stacy, do you have a follow-up question?
I do, thanks. To push on the PC a little bit. So you said industry volumes probably down double digits, so it's going to be even worse I guess, in the second half, given where you guys are running pretty strong in the first half. I guess, do you expect your full year client revenues to be down consistent with that industry outlook, or is pricing helping you or hurting you? Is share helping you or hurting you?
Yeah,
how do we think about the shape of your client business in the wake of that industry forecast?
Yeah, good question. Well, one thing you got to kind of separate is when we talk about the industry, we're generally talking about consumption, and when we're obviously, that's different than our billings because of the inventory movements at customers. We're not going to be as impacted as the industry TAM because we expect, partly because of pricing a little bit, but also because of inventory replenishment at the customer level. So I think from a modeling perspective, whatever we get to in 2Q is probably what we run the rest of the year roughly. So it's going to be kind of flattish from Q2 onward from a revenue perspective. At least is how we're modeling it.
Jonathan, can we have the next question, please?
Certainly. And our next question comes from the line of Timothy Arcuri from UBS. Your question, please.
Thanks a lot. I wanted to ask just about the evolution of your foundry model. And, of course, you're pursuing typical foundry customers, but it seems like Terafab is a little bit of a different deal and maybe even like a process licensing agreement. I wouldn't normally ask about one particular customer, but he did talk about it yesterday. So I'm wondering if you can just talk about that. Like, is that going to be a typical foundry arrangement, or are you sort of, going to possibly turn the keys over on like an entire fab to them? Thanks.
Yeah, Timothy, thanks so much for the question. So I think on the 14A, I think we are making great progress in terms of yield and the cycle time. And clearly, we're engaging with multiple customers, heavy engaging. And as usually, my style is under promise, over delivering. So we have no plan to announce the customer unless a customer wants to announce it, and we are supporting that. So I think back to the Terafab, clearly Elon and I, we believe that global supply chain is not keeping pace with the rapid acceleration in the demand. And so we both share the vision that we're going to learn a lot together, exploring the innovative way, and then in the process of the manufacturing. Saying all this, clearly it's a very broad, the relationship, and then we would update you as we go. Clearly, this is a very exciting customer to work with, and we have multiple other customers we are engaging. Stay tuned. We'll update you when we come.
Tim, do you have a follow-up?
I do, yeah. Dave, is there a way to sort of quantify like how much demand you're sort of missing out on? Like how much you under shipping the market still in Q2? Is it like as much as 10%? So if you were unconstrained, you could, revenue would be like 10% higher. Is that like a reasonable number?
I probably, not want to put a specific number. Let's just say it starts with a B. It's meaningful.
Jonathan, can we have the next caller, please?
Certainly. And our next question comes from the line of Vivek Arya from Bank of America Securities. Your question, please.
Thanks for taking my question. For the first one, I just wanted to understand the server CPU TAM growth this year. I think, Dave, you mentioned up double digit. I was hoping you could help kind of tighten that. Is it 10, 15, 15, 20? And then how much ASP expansion do you expect this year also, right? And what I'm really curious to understand is the new server TAM growth that you have, how does this compare versus what you thought 6 months ago, just so that we can get a better sense for what does this agentic CPU workload mean in terms of incremental unit and ASP growth?
I mean, I think when we're talking about the market, we're generally talking about units. 6 months ago, we certainly expected it. Well, I'd say probably at that point we were thinking it would be up instead of down from a units perspective. Now, obviously, it's going to be up meaningfully. I'll probably leave it to the industry analysts to pinpoint the exact number. ASPs, we have moved, obviously, to offset some of the cost increases we've seen over the last couple of quarters. But it's not the biggest driver, obviously, of our revenue outlook. We think the unit volume is going to be the biggest driver. Now, that's on an ASP per core basis. Obviously, core count is increasing significantly in the data center CPU space, and so we get the lift on as core count increases, we get the lift on the ASPs from that, and that obviously is meaningful.
Vivek, do you have a follow-up question?
Yes. Thank you, John. Maybe the follow-up, Lip-Bu, is for you on server CPU competition. So both, when we look at competition versus x86 against AMD, do you think you are gaining share? Do you expect to gain share against them? And then broader, I think the competition against ARM, because NVIDIA is planning to launch a standalone Vera CPU rack. Recently, we heard Amazon talk up their Graviton option. I think Google yesterday said they would launch Axion and connect it with every TPU. So just kind of near term, how do you look at competition versus AMD in x86? And then kind of medium to longer term, how do you see the competition develop against ARM? Thank you.
Yeah, good question, Vivek. I think clearly a couple of things. One, the CPU is a great demand right now. I think we all enjoy that. And then in terms of our product roadmap, we have been fine-tuning the last year. Typical new chip come out, it will take about 12 to 18 months. We are laser focused on execution. Multi-threading, I think we are putting in. So we're going to have a Coral Rapid, have the multi-threading, then we can compete effectively with AMD. And we try to accelerate that Coral Rapid ahead. And then the other part is we're also looking at some of the architecture, CPU and GPU architecture. I've been recruiting some of the top talent to really refine the new product to effectively competing against. In terms of the second question about ARM, clearly we know ARM a lot of respect for them. Renee is a good friend of mine. They have a licensing model. They have been very effective. And of course, they have continued to raise the royalty fee. And then now they also have the silicon team and building the silicon to compete and then provide the reference. And clearly some of the Amazon, Google, they are using that. That's not news. I sold the Annapurna Lab back to Amazon, so very familiar with that. Good news is I think clearly we have this OEM customer working with us. And then we also have a long-term relationship with some of these important customers. So the roadmap from Granite Rapid to Diamond Rapid, and then now to Coral Rapid is coming up strong. We very like our portfolio. And then on the server side, we also look at beside the 86, and we also have SambaNova partnership so that we do the data flow architecture to really driving that whole together. And we already have some success on that. And then the other part, we also recruit some of the top talent. Kavok used to be running the ARM data center server chips, so he knows very well. And then Srini used to be working with me at Cadence. We optimize for all the ARM products with the customer, so he knows how to optimize all the requirements in terms of tweaking the performance to meet some of the requirements. So I think all in all, I think we have the team, we have the technology roadmap. I think we're going to be over time going to be a very effective competitors to them.
And keep in mind, Vivek, that beyond the product side, we have another bite at the apple, or maybe multiple bites at the apple on the foundry side. We can provide customers with advanced packaging. We can provide customers with wafers. So we have a pretty strong breadth of offerings to customers to help support their CPU needs or AI needs, in the marketplace.
Thanks, Vivek. Jonathan, can we have the next caller, please?
Certainly. Our next question comes from the line of C.J. Muse from Cantor Fitzgerald. Your question, please.
Yeah, good afternoon. Thank you for taking the question. I guess I was hoping you could walk through how you're planning to drive increased output through the second half of the year. How much of it is yields? How much of it is cycle times? How much incremental wafer fab equipment, as well as outsourcing to TSMC? Would love to kind of get a feel for that, please.
Yeah. Okay, so first and foremost, we are increasing wafer starts in all three of our nodes, Intel 10.7, Intel 3, and 18A. More meaningfully, the EUV nodes, of course, but even Intel 10.7 will be increasing wafer starts this year. So that's a key component of our ability to meet demand. That said, Lip-Bu has pushed the team really hard to provide more supply the old-fashioned way with better yields and better throughput. And I think that's largely how we got it in the first quarter. So, we can expect him to do that through the year, and I think that will be a meaningful contributor to our output. Of course, we use outside foundries as well, and we flex them as needed as well. We've got Lip-Bu's got great relationships with the external foundries, and so he's able to leverage that to help us in that area as well. So it'll be certainly a component of it as we move through the year.
Just to add on to that, I mean, TSMC is a very important partner for us. Morris and CC have decades of friendship. And then clearly, we know our product group will decide, which is the best foundry. So I think we're going to use a multi-foundry approach, our own internal and also external. And so we really have good relationship, continue to build from both sides to benefit the customer.
CJ, do you have a follow-up?
I do. Thanks, John. I guess would love to kind of level set where we are on the advanced packaging front. You talked about rising backlog. Anything you can share in terms of what that number looks like, revenue targets this year or next, the number of customers? Any help there would be great. Thank you so much.
Yeah, I mean, I think I've actually said this in the past. We have been really pleased with our traction there, and I think maybe naively I had thought that these opportunities would come in the hundreds of millions of dollars level, but so far what we're seeing is that their demand is more in the billions of dollars per year kind of level. So this is going to be a big part of the foundry revenue as we get through this decade. And the good news is advanced packaging really is a differentiated offering for us, and it does a lot for the customer in terms of allowing them to use larger reticles. So there's real value to the customer. And as a result, we get very attractive pricing relative to some of the other areas of the foundry business. So we'd expect this to be at least, foundry at corporate average or foundry average gross margins over time.
Thanks, CJ. Jonathan, can we have the next caller, please?
Certainly. Our next question comes from the line of Srini Pajjuri from RBC. Your question, please.
Thank you. My first question on the 18A yields, Dave, obviously said the yields are better than you expected and looks like they're improving further. But at the same time, it is still a headwind to your gross margin. So if you could give us some context as to how much better they are. And also, as you go through the year, when do you expect that being a headwind to your gross margin? When do you expect that to, at least neutral to gross margins?
Yeah, I think 18A yields are somewhat a closely guarded proprietary piece of information for us. So we don't typically, I would just say, Lip-Bu had a target as we came into the year for the end of this year, and we're probably going to hit that probably the middle of this year. So he's done a very good job working the team to drive a better response there. And of course, that carries on to next year's expectations around yields. I think as we get towards the end of the year on a kind of a full pitch basis, this is combining the product margins and the foundry margins, will be in a relatively decent place in terms of the gross margins at Panther Lake. We've got more work to do at the foundry level to drive the gross margins to where we want to be. That's going to be multiple quarters before we get those to be foundry average gross margins. But it's tracking better than we expected, which is good. I think we have focused a lot on yields. Lip-Bu's brought in a lot of talent into that space to really focus on it, and we've brought in external partners that are particularly good at including metrology that's helped us execute better there, and we're starting to see the benefits of that this quarter.
Srini, do you have a follow-up question?
Yes, John, thank you. And then on the ASIC business, Dave, I think you said it doubled year on year. If you could maybe help us with what is included in that. I believe it's IPUs, but I just want to get a better sense how big it is. And as we look out to the next few years, what's the strategy for that business to grow? I mean, are you going after the classic ASICs in terms of XPUs, or is this more some of the adjacencies like what you're doing with IPUs? Any color would be, I think, helpful. Thank you.
Well, thank you, Srini. I think it's a good question. So I think this ASIC business, sometimes I call it the purpose-built silicon optimized for specific workload the customer want. And that's very important. I spend most of my time besides run and now focus on engineering improvement is spending a lot of time with customer. So it's very important to understand that workload and then how do we drive the workload and then to purposely tailor for their requirement. And then clearly it's very important to really have the right strong IP portfolio to be able to do that. And also we have very unique position. We have the CPU, XPU, and then we also have the advanced packaging and also advanced processing so that we can really optimize for the customer. That I think is a very exciting opportunity. It's a fast growing area. And then clearly we have something unique to offer. And we're already engaging with a couple of customers. The feedback from the customer is very excited, very positive to work with us. And I think stay tuned. That one, the next 5 years going to be a fast growing for us.
I think one thing that people have been surprised about is how big the business is already. You know, it's at a run rate that's north of $1 billion already. And I think Lip-Bu and his partner Srini have barely gotten started in terms of what we can make from that. So it's got a really strong base in which to grow meaningfully from.
Jonathan, can we have the next caller, please?
Certainly. Our next question comes from the line of Joshua Buchalter from TD Cowen. Your question, please.
Hey, guys. Thanks for taking my question and congrats on the very strong numbers. I actually wanted to follow up on Vivek's question from earlier. You gave some metrics on the near-term CPU TAM, but I think investors are directionally really struggling with how to model the CPU demand from agentic workloads. Any help you can provide us longer term about how we should think about growth, whether in terms of units, cores, gigawatts, CapEx, just anything you can give us. I mean, but bluntly, is the $100 billion number that ARM gave reasonable in your view? Thank you.
Yeah, maybe I'll start and Lip-Bu can pile on here. I think one statistic that we look at is the ratio of CPUs to GPUs. And if you look at training solutions, they're generally running in the kind of 7 to 8 GPUs to 1 CPU. As we look into inference, it's probably getting into like the 3 to 4 to 1 kind of level. And as you get into agentic and multi-agent, it's one potentially even flip in the other direction a little bit. So that's one way to think about it. As you think about the growth rate now going forward, it's going to become a significant part of the AI TAM. Keep in mind also, I would just say, data center obviously is where we're focusing a lot of our conversation on, but there is going to be AI and particularly CPU opportunities in a lot of different areas. The client space is, of course, as I already said, migrating towards AI PC in a more meaningful way. There's edge computing, there's physical AI specifically. All of those, I think, can benefit a lot from CPUs because of the nature of the power consumption relative to the performance. And so, those areas could have even more explosive growth than the data center space.
Yeah, just to add on to it, I think we have to think about the full stack. And so you address some of this agentic AI and later on the physical AI, how the CPU optimize working together with the foundation models, how to optimize that and using the data to really drive the massive opportunity in the agentic AI. I think inference is going to be a much bigger market, and the physical AI is another big market. So I think with that, it's an opportunity for us. And it's hard to quantify, but I think as you go, we will update you on that.
Josh, you have a quick follow-up?
Yeah, sure. Thank you for all the color there. And then, as we think about your capacity tightness, the leading edge foundries are also quite tight as well. Has this driven any near to medium term share gains and longer term? How important is your captive capacity to winning business with customers on a multi-year basis? Thank you.
Obviously, all the supply right now, or the lion's share of the supply, is all internal. But we do expect, obviously, to win customers over time. I think, I don't know. Is there anything else you want to add, Limbu? I don't. Yeah.
Perfect. Jonathan, I think we have time for one more question, please.
Certainly. Then our final question for today comes from the line of Aaron Rakers from Wells Fargo. Your question, please.
Yeah, thanks for taking the question. I want to go down the path of the supply side as well. I think in prior quarters, the suggestion was that you were reallocating maybe some supply of wafers from client to data center, and I think the notion was that maybe 1Q would kind of be the peak degree of constraints. As you rolled up your guidance for this current quarter, I'm curious of how you would frame, the level of constraints that you see in the guidance this quarter, and maybe, does the back half improve that dramatically?
Supply will go up in the second quarter. It's going to go up every quarter now going forward. I would say, we certainly were in our lowest point in terms of supply probably in the first quarter relative to the rest of the year. But what we were able to do in the first quarter was go through finished goods inventory and find opportunities to sell product we didn't think we would be able to move. It was either de-spec'd product or it was legacy product we had shelved and then worked with customers and found opportunities for them to leverage that technology in their system. So that helped out a lot. I'm not sure we have that benefit in the second quarter. So obviously we will scrutinize our finished goods inventory to see if we can find some opportunities. But for the most part, what we're relying on from a volume growth perspective, Q2 versus Q1, is going to be increasing supply.
Aaron, do you have a quick follow-up?
I do. Thank you, John. I guess as a follow-up, I know you talked about kind of the path of the server CPU and the competitive dynamics there. And I can appreciate that you're not given kind of descriptive timing of kind of roadmaps or future generation products, but how do we think about like the progression of your CPU on the server side, Xeon to Diamond Rapids, Coral Rapids, and really kind of closing that gap with simultaneous multi-threading? Just any kind of color on the cadence of the roadmap would be helpful.
Yeah, thank you. I think clearly that the demand is strong and that we fine-tune the roadmap. I think clearly we highlight the Diamond Rapid, after the Granite Rapid we have. And then Coral Rapid is the next one that we're multi-threading. And then, so I think that is our roadmap. We laser focus on execution. And then meanwhile, we're going to use our ASIC business to really drive some of the customer requirement. We can build some purpose-built silicon in the short term. And then that is a huge opportunity for us. We have all the unique assets that we can really provide. So I think those are kind of a roadmap and execution. I think year 2026, I call it the year of execution. So we are improving the execution. Back to Dave mentioned about the yield, productivity, the cycle time, make sure that supply chain we can catch up with the demand. With that, I would like to thank everyone again for joining us today. It has been an eventful first year for me at Intel. It is gratifying to see our progress, even as we know we have a lot more to do. I'm looking forward to see many of you at the JP Morgan conference in May and at the Computech in June.
Thank you, ladies and gentlemen, for your participation in today's conference. This does conclude the program. You may now disconnect. Good day.
All right. That wasn't very exciting. I guess we'll see how it performs going forward, but appreciate you all being here. Make sure you hit the like button on your way out. And yeah, I'm out of here as well. I don't know if I'm going to stream tomorrow. Maybe I'll stream for like an hour or something. But if I don't see you guys tomorrow, I'll see you on Monday. So, appreciate you guys. Have a good rest of your day. Peace out.